Good morning, everyone. Thank you so much for joining us today for our Trader Summit. My name is Greg Lewis. I'm the marketing manager here at MetaStock, and this is our studio. I'm noticing right now that that's sort of a mess right over there. Right over there. That's me. I was working on the studio and I just left a bunch of cables and cords over there. So don't look over there while we're talking today. Hey, we're really excited to have you. In case you don't know, we are MetaStock. We are providers of... I sure hope I have my right mics on. I think I do. Yes, I do. Okay, we are purveyors of marketing software and data for traders, active traders, just like yourselves. And we're really excited to share with you the thoughts of three great presenters today. We have Rahul Mohinder, and we have Price Headley, and our very own Jeff Gibby. And I just see that Avram has logged in and said hello, which reminds me, when you log in today, make sure you say hello and let us know where you're from. It's always good to hear from you. And also, know that this is being broadcast simultaneously on GoToWebinar and YouTube, and we're recording it on YouTube. So when you want to watch it, just come back here to YouTube and you'll be good to go. Also, while you're on YouTube, make sure to subscribe and like and all those good things so you'll be notified of stuff coming up in the future. Now, I'm noticing that there's 6 minutes and 24 seconds to go. I think that timer is slightly fast by about 2 minutes, but I'm not sure. This computer may be off by just a tick. At any rate, a couple things I wanted to show you real quick. Where are those things I wanted to show you? Here's one. All right. You may have noticed that today's presentation is a little abbreviated. We usually have 8 or so speakers, but we only have 3 this morning because we have a great event, as Jeff just pointed out in chat, coming up in November. It's called the Traders Conference 2020. Now, of course, generally or usually we have a live event where we invite you to join us in Los Angeles or New York or some other place like that. Of course, this year that's not going to happen. So instead, we decided to have a multi-day, biggest ever event. It's 3 days, 21 professionals, and 21 hours of tips and strategies. It's right here. It's the Thursday, November 5th, Friday, November 8th, and Saturday, November 7th. Now, to register for this, all you need to do is go to metastock.com/conference20. That is metastock.com/conference20, or just go to MetaStock and select events on the left and conferences, and you'll see it there. And I suspect by tomorrow I'll have a banner right at the top of the page so you can see it there too. All right. Oh, let's get this out of here. All right, we got about 4 minutes and 40 seconds. Avram has asked for the topics today. Well, let's look real quick, Avram. If you want to see today's topics, you can go to metastock.com/traders-summit, and here it is right here. The first speaker will be Rahul Mohinder, as I mentioned. He's going to talk about effective trend and trade identification with his RMO ATM 3.0. And by the way, he is the creator of that. And Price Headley will talk about how to target big trend gains with $1 options. And then finally, Jeff will talk about hidden gems in MetaStock, and that will round out today's presentation. And like I said, this is all being recorded, and you can just come back here to watch the recording. So, okay, Jeff, am I forgetting anything? Have I forgotten anything to tell these folks? I don't think I have. Again, make sure you say hello, and if you have any questions today, by the way, that's another thing I wanted to mention. If you have any questions today, do ask them in chat. We really encourage an interactive event, and though we may not answer the question immediately because some speakers, put it off until there's a Q&A session. Jeff is really usually good at asking the presenter at some point during the presentation your question. So if we don't answer it right away, please be patient. We'll typically answer it either to the presenter directly or in chat. So, okay, we've got about 3 minutes, and I'm going to go ahead and mute myself and make sure everything's okay on the GoToWebinar side. Thanks again for joining us.
morning, everybody. I hope we're doing well this morning. My name is Jeff Kibbe. It's good to see you here today. Let's go ahead and get started. We've got 3 great guests lined up today. Well, at least 2 great guests anyway. Let me go ahead and read a legal disclaimer, and we'll get on to it. Today's demonstration is designed to instruct you on using MetaStock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading, and MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So there you go. I do want to thank our sponsor today, Stocks and Commodities Magazine. They do a great job. They help us market these events. They've been supporting Online Traders Summit now for 7 years, which is also how long we've been running Trader Summit, if you can believe that. So I want to say thank you for them for sponsoring the event today. It's a great magazine. If you don't have a copy, you should get a subscription. They do such a good job over there, and we really enjoy it, them sponsoring the event. So our first guest today, we're just going to get straight to business, is Rahul Mohindar. Rahul Mohindar is, I think, probably a very famous Indian trader, but he's been working with us for a number of years in India. He's been working with MetaStock almost or just as long as I've been an employee, which is like 20 plus years now. He does a lot of interviews with CNBC, CNN India. His main business and what he does over in India is he teaches people how to trade. And I just love his methodologies. I love the way he teaches stuff. One of the things that I always kind of talk about is one of the strategies that's built into MetaStock, which is called the RMO, which was put together by Rahul. And it's the first trading strategy I ever used to make money with. It's also what I've probably done about 400 lessons, and including I'll show you how to use it today. So Rahul's great. He's a great partner. We absolutely love him. I'm excited to see him speak, and let's go ahead and get him on here. How are you doing today, Rahul?
I'm doing great, Jeff. Thank you for having me on this summit.
You're good to have you. I'm going to go ahead and turn the screen over to you, so you should be able to see a pop-up that says, there it is. I can see it.
All right, fantastic. Well, thanks for that introduction, Jeff. I know you'll be doing a lot of the inbuilt RMO, which is included with MetaStock. But I wanted to use my time today to also get into the add-on, which is the RMO ATM, the latest version being 3.0. So whilst I will walk you through some basics on the inbuilt RMO, I think today is all about showing you the strength and the power of the ATM as well. So I think you're in for a treat, whether you use the basic inbuilt RMO or you're looking at using or already using the RMO ATM. So let's dive straight in. And I'm going to be brief on the inbuilt RMO, but very important points that I want to get across to you. Some of the most relevant points, in my opinion, when you trade is trying to look at where exactly is the trend of the market. Is it up or is it down? That's the first thing that should hit us as traders as direction. Do I want to be buying? Do I want to be selling? And I think the RMO aims at doing exactly that. When we look at trading, we're looking at detecting this primary trend, detecting this major trend so that we can trade in this direction. So sum and substance, when you look at the RMO, which is the Rahul Mohindar oscillator. If you're wondering what RMO stands for, that's behind my name. It's an oscillator which oscillates above 0 when it's bullish and comes down to a negative territory when it's bearish. So if you simply see the RMO oscillator above 0, we're looking at buying the market, we're looking at a bullish trend, we're looking at a strong long-term trend. We're also looking at weakness when the oscillator is in a negative zone. So it's equally important to understand that buy side and the sell side. I keep telling this to traders because I often see amateurs or newcomers have this problem with selling short. They're typically only looking at what to buy. And I think this is where I always put forward the example, are you a boxer with one hand? If that's if that gets across to you, what it means is if you're only buying, you're only going to be happy half the times, or only when the market is bullish, that is. So it's important to be prepared on the downside. It's important to sometimes short this market as well, where you get a sell signal, you want to trade that downward direction and take advantage of it. So it's very important to trade on both sides of the market. I know this is kind of a elementary logic that I'm trying to get across, but believe it or not, I've met so many people who are still struggling with the fact of going short. I meet people and they keep telling me, oh, my comfort zone is only buying. I don't want to be selling. I don't own the stock. So you have derivatives. You have so many ways in which you could make use of a downtrend. If you can look at a signal on the downside, you should definitely be trading into that side as well. When I looked at a lot of indicators which are popular, a lot of you who use, let's say, a MACD or an RSI, there's a lot of mix and match one lands up doing. Someone's using 3 different moving averages, someone's coupling that with a MACD, coupling in an RSI, looking for divergence. And this is where I went helter-skelter, and that's what kind of drove me to build an RMO, to build an indicator which tells me clearly as to should I be buying or should I be selling. And mind you, I speak to you today as a trader to a trader, an investor to an investor. I put my own money on the line on the international markets, and this is exactly what I do for a living. And the RMO as a methodology was really built around me trading better, and of course that spilled over into getting it out to you. And when Scott liked it, he wanted it in MetaStock, so now you have it as well. But I think the essence is this is designed around the practical world of trading. Right? It's not about asking you to draw lines. It's not about asking you to detect where's the support, where's the resistance. Often you find a divergence. For example, here, the market makes a new high. Look at both the lines that are drawn on the chart. Markets are making new highs, and each time you have a negative divergence on the RSI, where the RSI is not able to make that new high. Typically, that's a sell signal or a red flag. And that stops you from participating in this major uptrend. This entire uptrend is missed out because of the fear syndrome of a negative RSI divergence. And here's where you need to kind of understand that something could be overbought because it genuinely looks solid or is genuinely very strong as an equity. You need to be looking at buying when there's strength. You don't have to be worried that something is overbought. You need to worry about when does that overbought phase end, when does it break out on the downside. That's the way to approach it. But I think a lot of times when we get over mechanical, for example, the MACD's got a couple of sell signals. There's a sell, a buy, a sell. You see lots of signals. And in this uptrend, those sells created so much noise that it often would knock you out in terms of the overall trend. So each time you see a positive divergence, look at this chart here. We're looking at a 2-hour chart when the E-mini was having a downfall. You continuously got these positive divergences on the RSI, and the E-minis just kept making newer lows. And this is exactly where I say the MACD is going to give you continuous buys and sells, confusing you at times. So nothing against these 2 indicators. These are great, but I think what I am looking at from a personal perspective as a trader and a well-wisher for you in terms of your trading goals is to have an indicator which capsules a lot of this information and puts it out there as an oscillator, which tells you, look, I'm above 0, try and trade me on the buy side. If I'm below 0, trade me on the sell side. All I need to look at, am I above 0 or below 0? I'm not looking at the size. I'm not looking at the shape. I'm not looking at the curvature. So I think that's what we did. We gave you the RMO trade model, and this is in every version of MetaStock 10 and higher. You have the inbuilt RMO to use. So you just apply that template, and you will have access to understanding that trend. The RMO is essentially focused in terms of detecting that primary trend. A lot of you would ask me, what do you mean by primary trend? Primary or long-term or major trend for me is equal to a time frame of about 60 bars or 60 candles or more. So if you're looking at a daily, 60 bars typically translates to about 3 months of data. If you're looking at hourly, well, it just depends which market you're trading, but 60 bars is broadly what we're looking at or more. Now, it increases our odds of winning because simply if the long-term trend is up, you want to focus on buying. You don't want to be looking at an opportunity to sell. You want to focus, okay, let it, even if the stock's coming down, you know, in essence, it's bullish, the long term is solid. I want to focus on that big picture and roll into that longer term trend direction. So when you put the template across, the long term is the green RMO oscillator, and the short and medium terms are detected by swing trade indicators, which are plotted in the form of arrows. So finally, you as a trader are really looking at this green oscillator, or if you like, when you look down at your x-axis, you're looking at the RMO bullish ribbon. And if that ribbon is marked as bullish, it clearly means that you need to focus on where to buy. Don't look at where to sell. Focus on the major trend being up. Another important thing which I'd like to get across is it's important you focus on the first breakout, the very first time that the RMO goes into a bullish mode. You are not looking at every single arrow. I think the mistake a lot of traders make to start with is they're trying to look at things very mechanically. Oh, I got a blue bar, which is the medium-term trend is up. I've got the arrow. I want to go buy, buy, buy. The subsequent buys are used more by me to upgrade the stop or to trail my stop. Typically, I like to look at the 5-bar low as a stop or the swing low. So if I've got a buy here, I'm going to look at upgrading my stop to this and trailing this position forward. Do not worry about the red arrows in such a case because the RMO is bullish. The long-term trend is solid. We're looking at really those buy signals. So very, very quick buy arrow occurs because the short-term trend is up. The blue bar occurs, which means the colors that you see occur because the medium-term trend is up. And finally, the green oscillator being above zero or below zero occurs because of the RMO being long-term bullish or long-term bearish, right? And when you have a synchronization that you have a blue bar, a blue arrow, and the RMO bullish, that's the situation you want to be buying in. And what you need to understand is we are looking for the first breakout, the first time it happens. Note, it does not happen all at the same day. For example, the blue bar came in here, the arrow came in here. So it's fragmented. You want to wait till all three align. So the arrow is the short term, which is why it's come first. The blue bar is like a medium term. And then finally, the RMO gets bullish. So you wait it up till all three synchronize, and that's where you want to buy. The second vertical, which I've marked here somewhere in the mid of April, we are not going to be looking at buying this because this is simply an add-on. An add-on because it's already in an uptrend. It's not the first breakout. You could potentially use it if you've missed out on the first signal, or you want to use it to trail your stops to this new low, okay, to the swing low that you have prior to it. So likewise, on the sell side, you want to look for the first breakout on the sell where you get a red bar, a sell arrow, and the RMO goes from positive to negative for the very first time. So here towards the end of May, early June, that's where you get the signals. I'm going to sell below the low of the bar that has all three in sync, the red colored bar, the red arrow, and the negative RMO. So that's my first breakout. The subsequent vertical lines that you see in August and September towards the right-hand side of your chart, you are not going to be looking at this as fresh opportunity unless you really missed out on that very first one. But it's more going to help me trail my stops, right? If you're already short, you can bring your stops down to the preceding high that it's made, or if you want to add on to that trade, you may add on in a very small way. So it's completely up to you how you want to take that forward. Me as a trader strongly recommends that the first breakout is the most potential breakout for you, and which is where I want you to focus on. So whenever you buy or whenever you get a signal, always use a trigger. In other words, if you got a buy signal here, look at this, there's a blue bar, you had the arrow, and the RMO went bullish. If you look down at the x-axis, I always say buy above the high. And the reason I say that is often you get a signal, but it's not triggered. You want to make sure that you get past the high if you want to qualify your trades. In other words, if you're talking long-term breakout, you at least want to get past that breakout bar's high. Otherwise, I would say that signal is no good. It's not confirmed. It's not qualified. It's not traded, which is why I use the word trigger. It only triggers above the high, right? This is a very important rule because at times you will realize that you would save your skin by using such a simple confirmatory condition of above the high when you're buying. And when you sell short, you're looking at selling below the low. In fact, let's actually dive into MetaStock. And I think I'd kind of want to work a little more with the chart today and show you how this RMO worked. Here's a daily chart of the Dow Jones Industrial Average. And you'll see over here when the market dropped early this year towards that Feb-March region, the RMO went negative, and that was your downfall. And post-April, the RMO has been positive. So despite the markets having, several tides down, and when I say several tides down, there's all these phases where the markets dropped. Whether it was in June, whether we had the recent one in September, we've had these drops. And each time when the market goes down, you keep wondering, oh, okay, is this a down breakout? But you realize that this is only a correction, because in most cases, you realize that not even the red bar low is broken. The red bar is the medium term. The medium term trend was not even broken. The low of that didn't even break. And in this case here, even if the medium term trend low got a bit threatened here, the long term trend was up. So your focus is directionally on the buy side. From April 2020 right up till date today, October 24th, 2020, we continue to be on the buy side of the market, simply because of the fact that the RMO is bullish. And which indicator gives you this level of clarity? I'm sure there may be some, but there are very few. And there's very few that give this to you with such visual ease and efficiency. I think that's what we've got to take cognizance of, is the fact that we're getting these signals so nice and clean, and it's keeping us on the right side of the trend. Imagine you as a trader, me as a trader, from April till date, if all I focused on was on to where would I buy, I would definitely be a winner. If all I focused on is where do I keep shorting this market, you know what the result's going to be. So very important to have that directional sense and then take a call. So that directional sense was very solid. Now, let's look at some other signals. Let's look at a chart of, let's say, Facebook, and that would give you another sense of, let me put on the inbuilt RMO template, because here I'm using a bit of the ATM studies, so just going in with the basic one. And that's a daily chart for you. And you can see here too, from the mid of April, all it's kept me doing is buy. It's only told me that the RMO is up, and the only thing I need to do is buy. In February, yes, we got the drop, the RMO went negative. But I think what you're trying to chase here is to be on the right side of the trend. And I think that's being done exceptionally well. Now let's show you a bit of the RMO ATM. Let's actually jump in on this very same RMO. The RMO is so popular and so easy to use. We wanted to make things even better. I wanted to make the refinement tailor-made. So for example, if the inbuilt RMO just works to standard formula, the new ATM RMO, or the super filter as I call it, works to dynamic formula, which means it adjusts to the volatility of the chart, right? Let's show you a typical problem you would face with a standard RMO where things get a little choppy, and how I would like to handle it, and what the super filter can do for me. If you look at a chart of McDonald's here, this is a daily chart. You've got a bit of chop. You've got, towards May, you've got a sell. Again, you've got a little sell in June. Now, you'll keep on worrying as to, oh, the RMO as well went negative over there, it went negative over here. So there's a bit of a chop there. The buy came in over here in April, and that didn't give you too much, and then it turned into a sell. So there's a bit of this whole phase, which I've kind of highlighted here, is not the easiest part to be trading in, right? And I think we could do things a little better here, looking at volatility. So with the super filter, and how I'm going to do is I'm going to apply my super filter template. And for those of you who have the ATM, the template I'm referring to is ATM RMO. Okay, so go ahead and apply that. And what you'll see is when I look at the super filter template, this whole area has got so well ironed out. We had the negative phase of the market in that Feb-March period. And subsequently, you look at how the colors have been orange and blues consistently. So right from mid-May till date, it's always been blue or light blue. Now, just to explain to you, red means bearish, orange is another grade of bearishness or a lighter version of it. And similarly, light blue is bullish and deep blue is a strong bullish tendency. So this is filtering out the very inbuilt RMO. And what it's doing is, a lot of traders come back to me and says, are you trying to say that we've got a faster version or a slower version of it? No, you would be, you would definitely not be looking at that as just a simple fast. It's about getting fast when it needs to be. So let's show you over here. Here, the indicators turned dark red right ahead in March when the crack happened. So when we were around $200 on McDonald's, we got that deep red bar. And the deep red means it's the highest form of selling. So that tells you that right there, you have an opportunity to go short because that's a refined, tailor-made signal. Similarly, in other words, here in this case, it gave you a faster or an earlier signal in March. Had you waited for the traditional RMO to break down, you probably waited a few more bars before you got it. But if you look at this whole phase in April, where there was a bit of chop of going up and down, we continued to stay orange. In other words, it didn't get you into a buy trade here, even though the RMO went bullish. If you look at the older one, you would have probably got blue bars here. You get in and get out and get in. There's unnecessary pieces of trading, which you should really appreciate that with the super filter logic, with the RMO ATM 3.0, that's all ironed out. So the beauty is here in March, it was faster because the volatility demanded it to be. And back in April, May, it slowed down, so it would give you a more refined buy signal. So you can see a perfect method where you can slow down when it needs to because the volatility may have dropped and you don't want to get caught in the chop, and it speeds up in March or early Feb simply because the volatility went to an all-time high level. So when you look at marrying in volatility and customizing the already powerful RMO within MetaStock, that's what you get. So the super filter, what you see right now with these four colors, light blue, dark blue, orange, and red, the super filter, as I call it, is a wonderful refinement on the inbuilt RMO. In fact, if you use the super filter, it supersedes the inbuilt RMO. In other words, if I get a dark red bar or a dark blue bar, I need to go ahead with that trade. Okay, so this is despite the older RMO because you've got literally a tailor-made signal there ready at you. So the beauty is the super filter has this ability to make it fast and slow. If you're looking for buys and sells, I'm going to come to my power screener. And of course, very quickly, if you want integrated buys and sells, we've got those scans. The explorers are ready-made for you. For those of you with the ATM, you've got a scan for the super filter. You've got a scan for an integrated buy and an integrated sell, right? So scanning is not going to be an issue for you. So here you can see, this is what I spoke about, the super filter. The dark blue and the dark red, they are extremely, extremely meaningful for me. Now, what else do you get with the ATM? One of the things which I definitely want you to look at is volume in a little better proportion. And I'll come to that, but just let's finalize this thought process. What we're looking at is light blue and dark blue bars, which are a refinement to the existing RMO. When you look down, you often have the RMO going from bearish to bullish in quick succession, like you see in the beginning part of the trend in November, December. That's all taken care of. When it speeds up, like here you have red bars which come in around this August, September phase towards the right-hand side, much before the RMO itself went below zero. So the super filter or the bar colors, that is, have that agility to come out earlier and has that dynamics to slow down and smoothen out data when it needs to. So you can see over here, it stayed blue and consistent blue for maybe a good 100, 130 bars or more. So you are looking at a more refined signal, and yet at the same time, a more quicker signal if the volatility steps in. And in other words, it's truly tailor-made. So in other words, you are definitely taking a quantum leap in terms of your performance by using the super filter. Personally, it's one of my favorite indicators, one of the indicators I always use in my trading. And I think that's one of the reasons I've been able to be on the right side of the trend with God's grace. So it's important that you have that mental focus and clarity, that what direction I want to be trading. There's a lot of noise for the last 2 or 3 months. Everybody's worked up. We're talking elections. We're talking, how uncertain things are with the pandemic and all of that stuff. And I keep looking at the chart and saying, no, my RMO is bullish. What I want to be doing is buying, right? So I think that's the level of clarity you want to come to, that the indicators are so well synced in that you don't need to pay attention to this noise of or pieces of news that often shake you up. And let's look at this again, another very good example where, look at the center part of your chart. It's all light blue, even though the RMO dropped negative. Just the stability of the signal is so much better. It doesn't unnecessarily get you short and long excessively. You wait for the dark red bar and bang, you go. Okay, you wait for the dark blue bar, that gives you an early indication of an uptrend. So I think this is one of my favorite indicators to be using. Let's talk about the volume piece, which I was, let's look at the piece of volume which I want to talk to you. And here I'm going to use an indicator called the strength weakness index. So let me actually close my layout here, and let's open up the strength weakness index. And for let's look at one of the recent ones was Tesla. I don't know if I have that ready, but okay, well, let's pull it up right here. So here's a daily chart of Tesla, and what I'm going to do is I'm going to plot the SWI, that's an indicator right there, onto the chart. And as you can see over here, this is measuring the volume that's flowing when the market's going up and when the market's going down. So in other words, if you've heard the saying where price goes up with volume, that's a confirmation. Or when there's a downfall and the volume increases, that's a confirmation on the downside. This tells you very clearly as to whether the market's strong or weak, just from a volume perspective. Mind you, the SWI also has its inbuilt template. And if you want to put on the inbuilt template, this is how it's going to look. It's going to shade the bars blue and red just based on volume, just based on that SWI indicator. And that red line that you see across the chart, which almost divides that chart up into bullish and bearish, is just from a volume perspective. Mind you, there is no price calculation going into this. It's only seeing, is there an increase in prices with volume or a decrease in prices with volume, and where that balance has changed. So rather than you manually doing it, trying to look at, oh, when it went up, let's look at what the volume was. When it came down, let's look at what the volume was. That whole balancing act and manual interpretation that you would do, let's see, is it above average, below average? All of that is well taken care of in the SWI, and that's where I wanted an indicator with just alone on volume and no other price-driven strategy gives me a signal. So if you can see blue bars, that shows you that that's been bullish all the way right from probably that April, till in September. And then in September, we're looking at a disbalance of the volume where we're looking at around that 430, 40 level, somewhere there on that bar, where we got into a negative phase. And mind you, this doesn't mean that the RMO is negative. This is just a totally different strategy, which is based on volume. And I can show you how it will help you marry this data in. It helps you get such a lovely reconfirmation of things as well. I mean, for example, if I recollect, if I went to a chart of Facebook, let's pull that open. And you look at the strength weakness there, you would also understand over there. Oops, I think I got the wrong signal. There we are. So often when you get a signal, let's say the inbuilt RMO, and let's put on that inbuilt RMO. Here we have, I'll put on the ATM super filter on. So you can see over here that this was light blue, dark blue. Essentially, you've been long on Facebook all the way, right? This entire phase from April, you're really on this buy tide. This was the one time where you got a orange bar, right? An orange or a red bar, a weakness bar. And we're looking at that red bar's low around 245.62. We never broke the low. In other words, you never went short. And you also got a confirmation that the SWI has slipped. So you say, okay, if it breaches that low, it works like a confirmation. Similarly, like you got a dark blue which comes in here. Dark blue is like a very strong super filter buy. You want to be buying Facebook around that 195 or 197 level, whatever that high of the bar is. And you also see that the volume tilt is totally in your favor, right? So what I'm looking for is whenever I get a new entry on my RMO, I like to use the SWI more as a confirmation, more as a gauge as to what volume is telling me. So it's a lovely picture that it sends across to you. And just to further kind of look at more combination ideas as to where I want to use this, let's look at some difficult charts or relatively difficult signals which may have come your way. Let's look at the chart of Google. I think that was one which definitely has a lot of price movement. So we'll look at Google, we'll look at Facebook, we'll look at both of them, in fact. So here you have the chart of Google where you can see very clearly that the SWI is plotted on the chart, and you have the super filter indicators coming in. So if you look at the older RMO, if I didn't keep the super filter on, there's a lot of chop. It goes up and down. There's a bit of down here. There's a bit of down here. And I think where you'll really appreciate is even though the RMO went negative there, what was the bar color? Light blue, right? So this is where it helps me. If you look at here, even though the RMO went negative here, number one, I realized that this was orange. Yes, I will sell, but did it break the low? No. So you didn't go short. What is the chart that I'm using here, folks? I'm using a 65-minute. And this is where you might think, what's the madness of using a 65-minute chart? Well, a lot of people just use a 60-minute or a 30-minute. That's the normal convention. And what they fail to understand is if you're trading US equities, you are looking at 6.5 hours of trading. You're looking at a market that's open from 9:30 in the morning till 4 in the evening, which is 6.5 hours of trading or 390 minutes of trading. If I look at an hourly bar, I'm going to get 6 proper hours, and I'm also getting one bar that's a half-hour bar, right? Theoretically, that doesn't fit in. If you're looking at an hourly bar, you want all the bars to be hourly. But when I made it a 65-minute bar, I get 6 bars, which are exactly of 65 minutes. So in other words, I've fragmented my trading into 6 bars a day. If you want to fragment it into 5 bars a day, you can make that even a 78-minute, because all I'm doing is 390 divided by 6 is equal to 65. That's how I'm coming to that. So you need to do this bit of housekeeping. Don't just go click hourly because it's easy and it's saved over there. You want to go into the custom interval and type 65 there. Another little piece of housekeeping that I always do, go into chart window properties, go into your trading sessions. By default, most of you would have this as 9:30 to 16:02. Go ahead and change that to 1600. Now I've done that myself here and I clicked set details. It's important you do that because then you take out that little post-close tick. So these are little things you've got to take care of, because what's going to happen is you're going to get one little post-close tick, which is like a 1 minute or a 2 minute bar within a 60-minute or a 65-minute setup. So take care of these little nuances and look at how refined those signals are going to be. So even though we went up and down on that RMO over here, look at how nice and steady you've been on that super filter. It's been dark red and maintained. So in other words, can I say that if I got a dark red bar, even though the RMO is bullish, I can go short? Why not? Because if you've got a confirmation from that SWI, that's a good signal because the volume is also tilted in your favor. You got a dark red, which is the strongest form of selling. I can act right there. I don't need to be waiting for the RMO to turn negative. Well, if you want to wait, no harm if you waited. You wait till here and then come in. Maybe a little later, a little more safer in your opinion. That's fine. But if you're kind of aggressive and you're willing to give it a go earlier, for me, if I get a dark blue bar and I see that the SWI is up, my RMO is bullish, that's good to go, right? What's important is look at the noise that I'm taking away. It's so important. It's so relevant. When these drops happen, you're light blue. You're not going to be trading on the downside because the super filter is light blue. So for me, the bar color, that super filter, is of pristine importance, is of extreme importance. We don't want to kind of go against the grain of the bar color. And when you even get an orange or when you even get a red, you want to make sure it's below the low. You want to check the SWI is also confirming. And that's when you set up with a very, very solid system. If you even look at Facebook, let's put on Facebook here. And let's actually go into showing you how we do that little housekeeping of correcting the. So here's a 65-minute chart. Now you can see what I mean. You've got the little dash, a little post-close tick every day. And imagine one wrong bar every day is going to have a Herculean impact on the overall performance. So right-click, chart window properties, do this little housekeeping. Is one time before you save your layout, you should go into that and hit, just correct those times. And every day what I've done is I've said, don't show me data after 1600 hours, because you and me are not trading after 1600 hours typically, right? We've taken out that post close, you've cleaned up all the dashes over there. And here again, you can see how interestingly you've been on the sell side right from here with the dark red bar and the SWI negative, right? Because that's where you get that dark red bar much earlier than the RMO, in fact. And then subsequently how you've been basically on the buy side of things after that. Now, no system is perfect, but look at this over here. You've got an orange here. The low of that didn't break. So again, you were able to kind of live this uptrend where she went from this level of about 260 odd dollars, and you rallied all the way up to these levels of 275, 280. So you're kind of in the right side of the trend. Where did I falter? Yes, we got a dark red bar there, and yes, I faltered. I may have gone short on it, seeing that the signal is all negative. But again, very quickly, I get a buy again with the blue, the RMO bullish, and the arrow. So that's what I want to get you into. Nothing is perfect, but come on, how many systems are there that can iron out the data so well? You were in the whole uptrend of August. You were in the downtrend of September. You're in the uptrend of October. Come on, you'll always have the odd hiccup. I don't have a 10 out of 10 system. I don't have a 9 out of 10 system. But if you have anything which is 60 to 70% accurate and keeps you on the right side of the trend with complete hands-free ease, and when I say hands-free ease, you're literally doing nothing. You're not drawing any lines. You're just applying a template. You're not manually calculating support, resistance, understanding the balance of volume. So here I combine two very powerful studies. All I've shown you is the super filter or the ATM RMO template, and I've coupled it with the ATM SWI or the strength weakness index. And that's what's helping me understand the grain of the market. And when we look at the overall performance, when you combine these two, it's fantastic simply because of the fact that you're using one indicator, which is price driven, momentum driven, and here you're using an SWI, which is just volume driven. So in other words, when you see red colored bars and below the SWI, that's kind of telling you that from a volume flow perspective, am I bullish or bearish? Mind you, all the studies we do, we have an expert advisor. So if you're looking for commentary, if you're new to the system, I would definitely advise you to read that commentary, because you will not interpret it incorrectly. It would actually spell it out for you. Again, it's a matter of a few days. It's a very visual experience with the ATM RMO. It's kind of self-explanatory almost with those bar colors, etc. go ahead and use the resources provided. There's some wonderful manuals which I've got up for you, rather manual, which is available under your My Downloads. You have access to the masterclass videos as well. So there's a lot of education to help you understand it. And of course, if you run into any kind of questions, we're there to back you up on it. It's important you understand that it's an easy system. And a lot of people kind of wonder, oh, can it be this easy? Yes, it's about you understanding that the computer, the ATM, the system is doing the hard work of the analysis and number crunching. We have to focus on our trading. We need to decide whether we will give this a better trade. In other words, we will weight our trade. We will grade our trade. We will choose between one opportunity and another opportunity. So in other words, that's where I need you. I need you as the trader, not you as the analyst, right? The analysis is largely done automatically. It's about having you put in that extra quotient of selection, balance, weight, which will make a sparkling difference to the performance. Often you have 3 signals in front of you. Which one do I choose, right? We'll come to those little pieces. Let's look at another aspect which I love using, which is the trend decider. Again, today I'm showing you 3 studies which I always use. And the reason I kind of always use this is because it helps me from both a trading perspective as well as someone who takes positions. The trend decider daily, weekly, 15-day, and monthly. There are 4 indicators in the suite, and I call this the ATM TD or ATM Trend Decider suite. And what we're looking for is a level of support or resistance which comes up either every day or every week. And this would help me gauge whether the market is bullish or bearish. Let's actually open up a chart. Nothing's better than looking at this in an actual chart format. So let's take Apple. That's one we haven't opened as yet. So let's get into that one. And what I'm going to do is apply the template. Mind you, all our studies do have a template. So I'm going to apply a template, which gives me a chart of Apple. Again, let's go down. So just to make things quick, I'm going to do hourly. And what you can see is different levels here. What I want you to focus on is the green level to start with. The green is like telling you for the day. If I break this down into a 5-minute chart, if I break the green line, that is bearish. In other words, you're looking at weakness for the day. Weakness for the day. So it updates every morning, and the green line is like telling you if it's bullish or bearish for the day. The minute I bring in the red line, right? The red line is my weekly. That's for the week. So if I want to look at this on a slightly higher time frame, and let's say I again apply that template. Okay, the purple one or the lavender colored one is a much larger one, which is monthly. But let's say, let's go back to that 60-minute, and you would be able to, in fact, let's go into a 30-minute just so that you can see this better. The red is for the week. So if you're not someone who just is a day player, you'd rather kind of see how's it looking for the week. Let me actually make this a dotted line. You can see that whenever it broke the red or the trend decider weekly level, you had a dramatic drop. And right on the x-axis, we again have a ribbon for you, bullish and bearish, where it tells you that if it's above daily and weekly, you're in a bullish phase, whereas below daily and weekly, it's in a bearish phase. So could I simplify and say that from this point I'm bullish and from this point I'm bearish? Absolutely. That's what we're trying to get at. So here's a momentum-based model. Here's a price-based model, which updates every day and every week to try and tell you, okay, here's the point where the stock's trading below its daily and weekly support level. That's why it's bearish. Or here's a point where it's broken out above the daily and the weekly resistances, and therefore it's bullish. Well, there's a lot more to this suite. There's so much more to this. In fact, another logic that one uses is the green line or the daily level higher than the weekly level? If that's also true, that's why it's marked at bullish. if the green line or the trend decider daily has broken the weekly level, I call that like a little confirmation or a crossover. If you can see price is trading below both the daily and the weekly level, the green lines drop below that red line, that's a confirmation of weakness. So you get a sense that the trend has changed. I don't know how many of you look at the E-minis, but that's something which I trade and I enjoy looking at. I actually saved a little layout. Let's see if I can quickly get that across to you. And the E-minis being a lot more dynamic because of the longer trading hours that we have on it. Let's show you a 2-hour chart on the E-minis. And I'm going to go to a custom and apply. Okay. There you are. So you can see this is a 2-hour chart. Each bar is 2 hours. And that gives you the trend decider daily and weekly. Mind you, the trend decider daily and weekly update every day for the green line and every week for the red line. So if you're looking at, where did I lose that? Here. Yeah, okay. So if you're looking at the template over here where you can have the expert advisor come in and you want to attach that trend decider onto the chart where you want to see the signals as bullish and bearish, not just on the RMO. You want to look at how those signals are coming up with respect to the trend decider. There you are. You've got the bullish and bearish which comes on. And of course, an easier way, a much more efficient way to do that is simply click on that template and it would give you all the 3 trend decider levels. Of course, you got to choose the interval of choice. In this case, I'm using a 120-minute chart. And now the bullish and bearish is being calculated. So the bullish and bearish that gets calculated over there is this comparison of daily and weekly. Why is it bullish here? Because it meets all my criteria. Price is trading above daily and weekly. In other words, is above the green and the red. So that's a breakout. The green line itself is above the red. That's a breakout. And that's why it's stamped bullish. Similarly, the E-mini contracts got into a bear mode when they breached this level over here of about 34.80, where you went below the green and the red. That's a breach. Green also slipped below the red, and that's where it turned negative. So here's something where we're looking at the signal just based on the trend decider concept. So you may think that I've shown you 3 different models. Well, actually, you have 6 or 7 different models when you use the RMO ATM suite. And they're all designed for a different purpose. For example, the RMO super filter that I talked to you about is designed for the purpose of being a super filter or a refinement to the existing RMO where you want to stay in that longer term trend direction and get those breakouts as they happen, right? So it's more of a trend-based signal. You look at the SWI, it's a volume-based signal. You look at the trend decider daily and weekly level, which I've got right up here for you. This is giving you a signal which is updating on a momentum basis every day, every week. Support, resistance, those elements are factored in. If you look at the ATM RMO 2, which is another template which I have, which I'm not running into right now, that's designed around someone who wants to buy and sell options, or rather know how to trade the options in an optimum way. So all of these templates are not something that you have to necessarily marry, but they complement each other very well. And this is where I need you to understand that if you decide today to start using the program, or you already are using, I would say focus on blending 2 or 3 of these together. So if you looked at these indicators together, imagine having the power of a super filter, a trend decider, and an SWI all in one template, right? And you trade only when you have absolute agreement of the 3. If there's disagreement, you don't trade, and that's where you get wonderful refinement. So this is exactly what I try and tell users is either you focus on a 1 template model where you say, look, all I trade is a trend decider, which is fine. Or if you want to try and blend it all in, again, it's something which you develop when you start using the program for a few months. You would develop that understanding as to how to blend these together. But they're very powerful systems on their own alone. Mind you, no system was built keeping in mind that, oh, you'll have the support of the previous system. So if you look at even the green line over here, there's a lovely logic which I use. I call it the staircase. And if you look at the staircase over here, think of these as a fleet of stairs. It's going up one floor at a time. Notice when you come down, it does not break the previous floor right there. Okay, so you have this staircase. This is one which broke the previous floor, right? And each time the staircase, so every time you come down, I'm trying to see where did you break. This is the previous established floor. Where did that happen? And that gives me an indication right here. I broke this floor, and therefore I get into a downtrend. Similarly, when I was in a downward trending market, this was the floor. This was the floor. When I went up here, I crossed that preceding floor. So you can look at it with this approach as well. It's quite dynamic. It's such an amazing model to use. The trend decider, I could probably do, spend hours and hours on this indicator, but yet it's so simple, yet it's so efficient and effective. It's something which can work for you as someone who's trading with a 1-day horizon to a 5-day horizon, or even for someone who wants to use a longer term horizon where he'd use the trend decider 15-day and the monthly. But all I'm trying to get across is blend in these indicators where you feel that it's going to give you a confirmatory role. So for example, if I blended in, let's say, the super filter on this very same chart, I can go into my expert advisor and I say, give me the super filter signals on this, and that's what I get. So now I get a nice little picture. I got dark blue, I'm above the green and the red, bingo. I've got dark red, but the problem here is the green is still above, but this one's okay because I got dark red and the green is now below the red line. The trend decider daily is below the trend decider weekly. So that's what gives you that comfort zone in terms of going long and short. And then you want to couple it further with the original RMO. The RMO is bullish when I'm buying. Here when I'm selling, you can look down and see, okay, if the RMO is turned negative, that's further favor. So if you want to blend in, blend in. But if you don't want to just use the super filter template or just use the trend decider template, you need to find your comfort zone. There's no perfect formula to trading. That each one has their own style, and I respect that. Just because I like the 65-minute doesn't mean I'm trying to tell you that there's anything wrong by using it on a daily chart or a weekly chart. But my own senses, again, I'm going to throw in 2 cents about time frame. If you use time frames like 1 minute and 2 minutes and 3 minutes, those are too short in my opinion. I haven't really seen a lot of people being excessively successful or making a big mark for themselves. They've definitely bought themselves a lot of stress. They've bought themselves a lot of ups and downs. So I kind of don't live in that club where I want you to trade 1 and 2 and 3 minute charts. But typically if you're 15-minute and higher, that gives you a little more space to react, a little more time to look at the charts, a little more time to assess things. So I'm more someone who kind of likes to be, let's say, in a 65-minute interval in this case, or a 78-minute interval, simply because I get the time to react. Plus, at the same time, you're swing trading. In other words, my typical trade length could be anywhere between 2 days to 2 weeks. And that's where there's a lot of dynamics. The market gives you this potential. Everything doesn't happen within 1 day, which is why the very short-term intervals may not always be the best. And yet, if I looked at a weekly chart or a daily chart, I sometimes find either the stops are too high or the market's too dynamic. So that's my experience. And each one of you as traders, yet I know so many fellow traders who are looking at just, let's say, a daily chart or a weekly chart, and they're very successful using the exact same indicators, but they're able to handle that time frame clearly because they're mentally tuned to it. So I think you need to find your space in terms of what time frame you want to be trading in, and you need to find your space as to what indicators you want to moving in. Mind you, this is not it for the ATM. I mean, the suite it goes on and on and on. And if I look at the number of indicators available to you, we have 35 different Power Screener fields. And one of the main advantages is the Power Screener app. And I would urge you to, when you sign up, go into the masterclass videos where I explain this Power Screener app. It looks a bit like this. It scans for you the RMO signals and gives you a proper buy and a sell. It scans for you the trend decider. It scans for you. There are over 35 different fields that you can come in on over here. So if you're looking for what's the SWI value, if you see blue colored values, they're bullish. If you see red colored values, they're bearish. These are telling you the super filter signals, or where there's RMO 3D buy. So you can set up this scanner and it would automatically scan for you. Mind you, unlike the Explorer, you have to select a set of stocks and then hit Explore. Then you've got multiple explorers to handle. In other words, you are looking at different signals, different explorers for different signals. Here in one screener, I could put a host of indicators, right? I could be looking at the SWI, the trend decider, all at one time. So not only is the ATM going to help you become rule-based and effective, but it kind of takes you into that element of how are you going to focus as a trader rather than the analyst. And I love this little funnel, which is actually a condition of our mind, in my opinion. We are worried about trade identification. The power screener is automatically finding those opportunities. The scanner, it works live, it works tick by tick. Even if you use end of day data, it'll work off your end of day data. It finds those opportunities for you, confirms it all. All you need to do is now decide how much weight you want to give to which signal. So in other words, if I've got a list of 100 symbols and 3 of them have a buy, you want to decide within those 3. And then you get into what we call trade management. Trade management is how you follow through and hold trades. And I think the trend decider is a wonderful way where you can trail the stop and hold those trades through till the momentum turns negative. So we as traders need to have the power screener to identify the signal. And mind you, it's a hands-free process. You don't have to keep scanning. It's automatically already made and done for you. It's instantaneous. You even have a voice alert. It would actually say RMO 3D buy on IBM, right? It's that solid. It's one of the first scanners in the world which actually has a voice alert, an email alert, and it does synchronize to all. So all the ATM studies, whether it's the SWI, the trend decider, or the super filter that I showed you today, are blended in. And of course, much more. As I said, there are 35 different fields you can put in, including some conventional tools. So for example, if you're someone who wants candlestick patterns identified, it could actually just mark those patterns out for you right on the power screener. So if you're looking for engulfing bodies or hammers, they come up right there. So we've thought a lot. We've thought very, very, very deep. And I've thought about you as the trader, you as someone who's concentrating in terms of trading and trade management. And you should have ready-made signals which are ready to go. All you're going to do is open that chart, confirm up, and go ahead with it. So the idea is we've brought it to a point where things are highly automated, where you have the analysis not just being automated, but at the same time, very, very powerful. Mind you, I showed you that chart of the Dow or Facebook or McDonald's, which are not easy. And in the last 3 or 4 months, even on that hourly kind of chart, we have performance which is near perfect. So it's fantastic the way it works. The performance is something which speaks for itself. And I think that's one of the reasons why the RMO ATM is one of the largest selling add-ons of MetaStock continuously. And even when we do provide updates, we make sure what we come out with is very, very meaningful, something that makes a difference. I'm not someone who pushes out an update every 6 months just for the heck of changing a number or every year. We really think deep before it comes across to you. So now what you have in terms of the RMO ATM 3.0, you have a very, very refined, solid system with you. I think that's what we have time for today. I'm going to turn it over to Jeff, and we'll get into some Q&A if we need to. And we could, I definitely tell you that resources, go onto your My Downloads page. There's the manual. There's some of those masterclass videos. Even though they're of previous years, you will certainly find it very, very helpful.
Thanks,
over to you, Jeff.
Yeah, you do have time for just a couple. Well, we don't have a lot of time, but we can go a little bit longer if we need to, since it's a bit of a short session today. Do you have time for just a couple questions?
Oh yeah, absolutely.
Okay. So back when you were talking about how to set up like a chart for the S&P for day trading,
right.
We had a question about if you have recommendations about how you would set up for the FX markets from Clifton.
Clifton, I think, first of all, great question. But again, what exactly you want to look at in terms of day trading Some people trade very short time frames. So in other words, you could have short time frames which are 1 minute, 2 minute, those kind of charts. Now, FX, there's one element which we all must take care of, is the fact that when you look at an index or an FX instrument for that matter, we don't have volume data. If you don't have volume data, you cannot use something like the SWI. So that's something you better keep in mind. What would I use? I could use the trend decider daily and weekly level. I could be looking at the super filter as I showed it to you. I could be using all the different indicators. I haven't talked about all the templates today, but definitely leave aside the zone detector and the SWI, which are very, very volume dependent. I would freely use all the various indicators that I talked about. As I said, for starters' sake, you need to find what time frame works best for you, and definitely look at that trend decider and the super filter to start with.
Now, this might be a can of worms that I I regret opening. But Jay asked, he said, this looks like it works really well with RMO. Well, the RMO works really good with trending stocks. How does it work with sideways stocks? And I was hoping maybe you could just talk for a minute about how you, maybe just some general recommendations about how to select stocks that would work well with RMO.
Jay, I think today was all about talking a lot about the sideways phases. If you remember, I opened up a chart of McDonald's on the regular RMO, and we saw that period of March, April, May this year, where we saw a bit of wallop on the inbuilt RMO system. And with the super filter, you could see that refinement. So the super filter is trying to handle that noise right there. So what we talked about today was to take you into some of the difficult, I could have clearly picked up the days where Tesla had the nice big up move and the nice down moves. But I tried to kind of look at those phases where, there were those 2 or 3 months where we were in that grind. I showed you that phase of September, October, that whole phase, just to help you understand that the super filter is already doing that filtration of taking out the noise. And talking about sideways, look at a template called the breakout catcher. We have something called the zone detect and the zone fill. If you see that at a value of 0, and that's flat, you understand that the market's sideways, you should avoid trading. So if you're someone who's very worried about sideways price action, which is good because of the fact that most systems would fail in a sideways market. So if you see the zone detector at a value of 0, avoid trading it. But to kind of sum up, the super filter is doing a lot of filtration right there to handle that sideways question. And secondly, the zone detector will further help you in terms of, figuring out, are we in a sideways phase? Should I avoid trading? In fact, I kind of extend this a little bit by saying any system would typically, not work the best in a sideways. I would say majority of trending indicators would not work. But the point is, these indicators are tuned or tailor-made that well that they should be able to survive that. And the best thing is to go back in time and see how it performed, and I'm sure you'd be convinced as to the way it's been working.
Perfect. Thank you, Rahul. What a great job. I appreciate it. That's let me go ahead and do you have any final thoughts?
Thanks, Jeff. I think, first of all, folks, thanks for joining in. This was a wonderful opportunity to give you a little peek or an introduction into the system. I think when you start using it, I would say that that's when the real fun starts, where you have a lot more to look at, where you have a lot more studies to look at. So I think this, the system is easy to start with, but I think whenever you get the program, give yourself at least 5 or 6 days to go through the manual and the videos. And if you need any one-to-one assistance, we're always there to kind of walk you through that phase. It's important you get your basics correct. And I think we've done a lot to kind of help you through different videos to make sure that that whole process is easy and simple for you. Above all, try and stay away from using a lot of things and a lot of different time frames. Decide what's the time frame I want to be using, what are the set of stocks or commodities or futures that you trade that you're going to be looking at. The worst thing a lot of traders do is they keep jumping time frames. You start by saying, oh, I look at a 65-minute chart, but when it doesn't work, you change it to a daily. Or you start with a 5-minute chart and you make it a daily. So I just don't appreciate doing that. I just warn you from doing that, because if you keep changing time frames, you'll never realize your true performance. And that's a thought I'd like to leave you with. Are you changing a time frame just because you're losing money? Because unless you trade 10 trades in a row with the same rules on the same stock, you'll never know if you're 7 out of 10 correct.
Thank you, Rahul. I really appreciate your coming in here today. What a great job today.
Thank you, Jeff.
We'll plan on having you back soon. All right. Very good. Thanks, Rahul. Okay.
Thank you again.
All right, very good. So let me kind of just talk a little bit about the Power Screener and the Power Screener app. I do want to spend a second saying thanks for Rahul. Just the impact that he's had on me personally with my trading, let alone all the stuff that he's put into MetaStock. But a few years ago, he developed and released the very popular RMO ATM 3.0. It includes the Power Screener app, the breakout catcher system, the counter trend indicator, the SWI, the trend decider suite, the super filter. And people have really, really liked this. It's our most popular subscription-based add-on. So what we're going to be doing with that today is, if you want to get that and add it to your MetaStock program, normally it's $150 per month, $149. What we're going to do here at the Trader Summit is, if you want to get it, we're going to go ahead and give you a $99 per month price for the life of your subscription. So as long as you keep your subscription active, you're going to save $50 every single month. And it is our most successful subscription-based add-on that we've ever done. So a lot of people like it. And the thing that kind of speaks volumes about that, if it's a subscription product, people keep paying for it. And the reason they do is it keeps helping them make better trades over and over and over again. So you can give us a call. We can add this to your MetaStock account, 800-882-3040. You can visit us at metastock.com/saleschat, and they can add that to your account as well. One of the things that I will add is, if you are new to MetaStock, we're going to be talking quite a bit about MetaStock today, but I'm just going to say a few things about it right now. MetaStock's been rated the #1 software program in its price category for 25+ years in a row right now. And if you don't have a copy of it, but you do want to take a look at the Power of RMO ATM, we'll actually give you a free subscription trial to our real-time premium version of MetaStock. So the phone number for that is 800-882-3040. You can visit us online at metastock.com/saleschat. I do also want to kind of talk about a little bit of a training that we did with Rahul. Again, we've been working with Rahul for years now. And earlier, I think it was, we sat down with Rahul. We did 3 training classes, and he did a really, really good job. He did one on trade detection and entry models. He did one on trade management, and he did another one on the ATM. That's an ATM masterclass. Now, so this is in addition to the training that you'll get with the add-on. This is kind of a premium sales training that we put down and recorded. And normally what we're going to do is we normally sell that for $4.99. What I figured we'd do for that is, because it's all recorded, it's ready to go, we're going to do that as a $3.98 special. But as part of that $3.98 special, so we're giving you $100 off on it, we're going to give you all 3 classes. We're going to give you the first month of RMO ATM, and we'll also give you a subscription again to MetaStock Real-Time if you need it. So you can give us a call, 800-882-3040, or again, visit us at metastock.com/saleschat. It is also part of a kind of like a combo package that we're going to be doing with the Big Trend Toolkit. We've got Price coming right up here. And he's going to talk a little bit about the Big Trend Toolkit. But you can get 3 months of MetaStock, 3 months of the Zenith data, 1 month of the RMO ATM, Rahul Mohindar's training package, a 3-month subscription to learnmetastock.com, Unleash the Power of MetaStock, 2 years of stocks and commodities, the White Glove service, the Big Trend Toolkit, which isn't on here, but all of that would be included for $11.96. So we're going to talk about the Big Trend Toolkit. Today's like a kind of a throwback. I think really we have 2 of the people that have been most influential to me in my own trading today with Price Headley. But 1-800 882-3040 would be the phone number for that. MetaStock.com/sales chat. So there you go. A couple questions that we have coming in here. Then they just went away. In terms of the recording that you're watching on YouTube, if you're watching us on YouTube, will be available. Just hit refresh if you want to view it, and it will leave it up there. Okay. We do have a question coming in that I'll address real quickly from Nana India. Please discuss about Indian indices, Nifty and Bank Nifty. So I will say this, we do have a number of customers, mostly due to Rahul Mohinder and all the work he's done in India that trade with Indian markets and Indian stocks. We probably won't have a time to kind of look at those stocks today, but we do cover the Indian market, and I'd encourage you to try out MetaStock as part of that. So let's go ahead and kind of say thank you to our sponsor. Thanks, Stocks and Commodities, for sponsoring the event today. Great magazine. They do a great job of actually promoting and sponsoring and helping us with this event. We've been doing it for 7+ years now, and like I said, they do a really, really good job. So the next person I want to talk about, though, is our next guest, Price Headley. Price Headley runs a company called BigTrends.com. Price is basically written a couple of books on trading, and we've been working with him for probably 2 decades now. Pretty close to 2 decades, probably not quite 2 decades, but pretty close. I remember initially when I had contacted Price, I was like, very impressed with kind of the work that he had done up to that point. He was one of the top market timers for Timers Digest, and he had written a book called, I think, Big Trends in Trading is hopefully the name of the book, which is a really, really good book. One of the things that I like about Price particularly is his kind of the philosophy he takes into trading. And I'll let him talk a little bit more about that. But one of the things that he always says that's always kind of resonated well with me is like, there's 3,500 stocks that exist that are optionable. I want to be able to kind of go in and forget about all the opportunities that are mediocre, just don't exist on the charts, and want to figure out the best way to kind of look at the best opportunities and the biggest trends in the market. And that's what his research has always been around. And I just love that in terms of the attitude, some of the systems that he uses, and another person that's been a huge influence and a huge help to me personally with my trading. So let's go ahead and bring him on here. How you doing today, Price?
Hey, Jeff. I'm great. How are you today?
I'm doing awesome. I've just sent the controls over to you for the screen.
Oh, thank you, sir. It's always great to be with you, and it's a really tremendous event, like you said, with Rahul's presentation. I enjoyed that, and I'm always looking to learn too. So, the beauty is I've been trading 30 years, and one of my philosophies is always be green and growing, never be ripe and rotting, because
Right.
you want to make sure that you stay fresh in these markets. And like you said, I saw somebody that was talking. Can you see my screen here? Let's make sure.
Yes.
Okay. And
I can see the non-expanded view. Yeah, perfect.
Okay, perfect. So yeah, are we ready to roll?
Yeah, I'll get out of your way.
Thanks so much. Well, I want to hand it back over to you at the end, obviously, to talk about more of the power of MetaStock. And good morning, folks. They have been volatile markets this year. I know we want to talk a little bit about option strategies too, but it really goes back to finding the best stocks. With all due respect, I saw somebody saying, you're only talking about the great stocks in the last hour. And what about the sideways stocks? I have no interest in sideways stocks. I want to be on the fastest movers. I have a need for speed. Okay. I want to see things moving up fast or down fast. If they're not moving, I want to rotate my capital into something else. So this is about not getting stuck on the slow horses. It's about taking advantage of the best and biggest trends, like Jeff was saying. So just a reminder, what I want to do is walk you through some of the philosophy behind big trends and what I've done in my trading over the last 30 years, but also then get into current markets and look at some current charts and the power of MetaStock with the Big Trends Toolkit. Reminder, though, it's not recommendations. This is something that's education only. Of course, you are solely responsible for your own investment decisions. The biggest challenge that I face, and I think we're all facing this, more and more in this internet information age is information overload. They say that the internet amount of information, it was doubling every year, then doubling every 6 months, and doubling every few months, because there's so much that everybody's posting out there, and you got all this news media, all this other stuff coming at you. And so MetaStock is critical for me to look at how do I scan, and what they call Explorer. The Explorer finds ways to find the best of the best news signals. And in the Big Trends Toolkit in MetaStock, which I'll have Jeff come back and tell you a lot more about, we've got about a dozen core indicators that I've found that work. But what I want to walk you through today is our newest addition to that, and kind of consolidating that dozen or so into the best of the best single indicator reading, what we call the Big Trend Score. And I'm also going to walk you through an innovation that came from a particularly useful indicator that I've made a lot of money on over the years, and that's the Larry Williams percent range or percent R indicator. Then I tweaked into a band that I call the Big Trends band. Now, a lot of you probably heard of percent R. Larry Williams is a friend and a brilliant trader, and I found it was a very useful line, but I actually used it in a different way, which is that I like to see things go overbought and actually stay overbought for the best upside opportunities. This is very contrary to what most of you are trained on. If you hear the words overbought, you're immediately thinking that's terrible. You don't want to buy it because that's what you've been trained on. So overbought is a misnomer. It's a word that most people are missing the best opportunities in the market because they say that stock, whether it's Tesla or Apple or whatever, in its big runs is, quote, too overbought. And your job as a trader is to take advantage of those phases when a stock is in a strong trend and capitalize on it. I don't recommend just riding it forever and never having rules on how you're going to get out. So one of my first rules when you convert these stock ideas that I show you into an option idea is that anytime you get a double, anytime you can double your money on any trade, whether it's an option, a stock, or anything else, I'm mainly talking stocks and options today, but you can apply this to Forex futures, etc. Anytime you can get a double, you should sell half of your investment at that double or more if it gaps in your favor. Because if you can sell half at a double, you've given yourself a free trade. You've given yourself a chance to then ride that overbought trend to give it a chance to get to something even bigger, like a triple and a quadruple. And for my Grand Slam option service, that's what I use as my targets: 100, 200, and then 300% for these aggressive options that are trading for $1 or less. We call them $1 options. And so when you find, say you get a signal on whatever it is, Alibaba, and you say, okay, well, then I want to buy a $1 option. It might be, 50 or more points out of the money, but we're only going to ride it for the period that we need it to run, and then we're going to get rid of it. On the same way, oversold, when something gets oversold, a lot of people get tempted to start buying a, quote, oversold stock. In red here, that's a bad thing. We don't want to do that. We want to be positioned to say, you know what? Why do these stocks that are oversold, like what you saw in March, why did they keep going more and more oversold? Because the institutions were dumping those stocks. The pandemic was on. They basically were under pressure like everybody else was, and they were bailing out of a lot of stocks and continued to press those stocks to the downside. Only when the market bottomed March 23rd and on some hints that the Fed was going to basically come to the rescue, which they officially did in early April, and that put a backstop underneath stocks, did the institutions start buying in mass again. And so the point being that, let's face it, institutions drive the market more than you and I as individuals. So when they want to buy something like MasterCard in this example, this is the old school scale. Williams uses a scale from 0 to minus 100. I tend to like a grade school scale of 0 to plus 100. But regardless, what we care about on this chart here is the top 20% of signals. So when something goes, quote, overbought, like you can see on the left side of this chart here, I'll circle this first spot here. When it goes overbought on this chart right here, that was happening right off of this first high. And what I want to see is off this first high, if you draw some resistance right off of that first high, right, that little hash mark there, it was a gap up after earnings. What happens after that first overbought signal is what I care about. So the first overbought signal when it first gapped up is what I call the setup. That's where you're saying, okay, it's just gone overbought. If it's the top of the trading range, should it keep going up? You and I know that if it's the top of the trading range and you're betting on it coming back down, it better hold that resistance and keep coming back down. And so the philosophy here is that If the market proves that it doesn't want to stop there, if it wants to keep going up, what does that tell me? That next bar where I've got that first blue arrow in the bottom left, that's my first buy signal. That's what I call confirmation. That tells me that the institutions, the major players, want to buy more of MasterCard, and they usually can't buy it all in one fell swoop in one day or 1 minute. They've got to ease into it, or if it's on the downside, ease out of it. The other thing you're going to learn and you're going to see as I share with you kind of my composite indicator I call Big Trend Score, and it started with this philosophy of a pattern I noticed when I was trading these %R names, is that I used to get worried when it first came out of that overbought zone. If you think about the overbought zone, this chart here, it's this top 20%. And this goes back to the philosophy here of the 80-20 rule. The 80-20 rule says, hey, the 20% of your trades are going to drive 80% of your profits. 20% of your actions in life and business and whatever you look at are driven, 80% of those gains are going to come from about 20% of your actions. And so the point being that if it's coming out of that overbought zone, I thought that could be really bad. But with %R, it's a little more volatile than, say, a stochastic. And so you can see as you draw it down that hash mark, that low becomes what I call a bull retest, meaning that if that low holds as support, kind of the stair steps model that I know our prior speaker was talking about as well, the stair steps of support is right there on that low from May 14th on that example. If it holds that, you've got a great chance to not only tighten your stops there, but also a great chance to consider a re-entry of the trade if you missed the first wave. How many trades can you look back on and say, I missed that first wave, I felt that I was too late, so then I just sat there and watched as it kept going up and up and up. And you see, that's a great pop back up over the next couple of weeks. And then if you miss that, there's a second retest coming there in early June. You can see we get a quick hard flush on the downside. And a big part of what I teach people is that once you actually see that retest forming, you've got to get yourself in a position here where you say, okay, I know that retest is formed. That low must hold on a closing basis. Now, everything I'm going to talk about here is a daily chart today, but you could do this on intraday as well. Do not get flushed out by that intraday fake out the next morning when it tried to test below there. It didn't close below there. It came back up and closed above that support. So the point being that I call that a closing stop, meaning that I only get out if it violates on the end of a future bar, not on an intraday noise. And what a great entry it is as you catch that rocket up. That's where we got a nice piece of that for a quick 100 and 200% gain over the next week on that type of name. Now, you see, they don't all fire successfully. Sometimes you get in, nothing happens. And so another big thing I teach for my Grand Slam traders, when you're buying an out-of-the-money option, you're buying an option for a buck or less, that's $100 a contract to control 100 shares. If you sit there and over 5 days, it's done nothing, you can see about 7 days after that, we're going to get a violation. We're going to get exited out. Why? Because this next key retest low gets taken out right on this next down red arrow. That's not a bear signal. That's an exit of the prior bull signals. Now we're into the question mark phase. And you can also see on this chart too that when it tries to go overbought again up here, up near the top of this page, this overbought signal, you think, okay, well, it's about to go again to the upside, right? Well, actually, it never got through that resistance, so you do not have a new signal. You stay away. That is the top of the range, and we move on to the next opportunity. I don't try to trade that as a bear signal. I just say it didn't do my bullish setup, so I'm not in confirmation, so I'm not going to trade that. But if you get into a trade and after 5 trading days on the daily chart, it's not working for you, you're flat or down on an option, get out. Just take the 5-day rule as another good rule of thumb that we use for our Grand Slam approach, which is the best trades are going to be right fairly quickly. You can see these other retests when they held, they started to bounce back. They're starting to work for you in the first few days or more. After 5 days, you're sitting there, nothing's happened, or it's against you. Get rid of it, cut, and run to the next trade. Now, what I did is, and Jeff has been such a huge help, and all the team at MetaStock, to really help to code this stuff in to actually say, okay, how can we see that overbought phase? This is Apple from a prior period. We see overbought now is if we're above that top blue line here, that's the 80 percentile line. That's the top overbought threshold. So when Apple gaps up, for example, in the far left of this chart, that's right after earnings, of course. It's okay. Here it is gapping up. It's market on the chart here. I would not buy it right on that first gap outside that band, but a few days later, it closes above that first bar's high, and that's the point at which you now have a fantastic buy and a fantastic ride to the upside right through this phase here. You can see there's another couple of bars where you can catch a brief run here, and then it exits. That second trade doesn't do a whole lot for you. But if here's another good lesson in trading, folks, is that if you lost on a prior trade, but you were just following your setups properly, you've got to give yourself a chance to take that next trade and say, it's a brand new opportunity. So we get our next entry, you see what a great signal that phase gives you. Now, I'm not going to just hold it all the way to the exit signal when I'm cashing out of these trades. If I get a double, like on those kind of the first and third trades here, I'm going to be taking that first half of my position out at a double. If I can triple, I take half of my remaining. If I can quadruple, 300% gain, I take the rest out, even if the trend is bullish. Because my experience has been that at that point, your risk of reversal is increased. So what you don't want to be hanging around for is something like what happens over here with this huge black candle to the downside right here. You don't want to get stuck holding that position. If you did have that position on, obviously you got to blow it out at that point, but that's going to give back a lot of profits, or even see a profit turn into a loss if it's too violent. So part of your job in these volatile markets is taking money gradually as the market makes that money available to you. On the downside, the 5-day time stop, I find, is even more beneficial than putting an initial price stop on these aggressive option trades, because there's a lot of trades that I'll be wrong 20, 30, 40, even 50% on a good pattern and still end up turning a loss into a gain. So what I do is I say, wait for the 5 days. If I'm wrong at that point, blow it out, whether it's a 20 or a 50% loss. And because we're trying to make multiples on your risk. The beauty of buying options, a lot of people have sworn off buying options because they don't do it right, or they heard horror stories of people that blew themselves up. Ironically, you can blow yourself up even faster selling options if you're not careful with that. I talked to a lot of people who think that selling options is nirvana. Let's face it, options are a zero-sum game. There are ways to make money buying and selling options. There are ways to lose money buying and selling options. Your job is to say, and I'm teaching over 30 years of trading experience. I got started graduating from Duke University in '89 and made all the early mistakes that are a hallmark of option trader mistakes, which is thinking I knew more than markets, holding something to expiration, wiping out on a trade because I thought I knew better than the market. That perfectionism as well wouldn't let me cut and run. I quickly adapted using tools like MetaStock to say, hey, technical analysis shows you exactly what's happening on the chart. Let's look at some other examples of this. So now what we've done is, Jeff, thank you again. Jeff and his team, I said, look, I want to take all my big trends indicators. I want to put them into something that I call big trend score, which is just one reading, this big trend score here, that tells me, hey, if it's moving into the top 20% of all the indicator readings, which you can see starting to happen here on this chart up here on the left, well, middle actually, this chart, right about here, okay? Now all those indicators are telling me we've got a sweet spot area there, and look at how the chart picks that up, and they've even color coded it down at the bottom here. There's not a lot of these periods, folks. You're not going to get a ton of green and a ton of red for any stock. You shouldn't want that. You should only want to trade the best of the best, because with MetaStock you can roll around to the next stock and come back to trade Apple another day when it's in one of those sweet spots again. So notice on this chart that you're getting this great opportunity to be in Apple, is it not just as it breaks out of the big trends band, but everything else comes in to support it right here in mid to late February. And during that phase, you can see how powerful that is. You're seeing the stock go here from about 121 up to about 134 in about 7 trading days. So you got that speed of movement that I was talking about. I really have to get that. So when I get that signal in here and want to take advantage of this little window in time, that's where no matter what type of option you're buying, you can actually make a lot of money really quickly. Obviously, every trade involves risk. You could lose what you put into a trade when you buy an option. But if we get in and it's not working after 5 days, we blow it out. And when it is working, we're steadily taking money off the table. And usually a 10% move like that is, and especially in that short of a period, is going to be good. Even with a 1 month option, which is most of what I'm buying, is about a month out in time. And that way I try to give it that first week to prove it to me that it's working. The first weekend, we've already doubled our money plus on that trade, and then the 200 and 300% targets are going to follow behind on a quick 10% move like that usually. Assuming it's not priced for, say, earnings, which the earnings were already behind this stock. That was what started that gap up back there in later January. So the point being that notice the difference, how you're getting kind of a test right in here. There's one bar above there but you see that one bar does not hold. So usually one bar to me does not make a trend. When I first see it go green here, I'm saying, prove it to me. So right on the dotted line on this chart, it's April 27th. I'm saying, can it close above that level? Now you say, oh, well, it opened above it the next day, but look at where it closed. It closed back below it. So the confirmation rule that I just taught you about would actually keep you away from that setup because it didn't follow through compared to the February signal that did. So just when you're thinking, hey, it's just starting to break the new highs, I want to jump on like everybody else that next morning, I don't like being overreactive. Our prior speaker, Rahul, mentioned that as well, that you don't want to get into really short-term time frames and really create a lot of stress for yourself. This is a daily chart, looking at it one day at a time and saying, okay, there's one action point or not on this chart. Notice, and as you go back and look at some of Apple's great moves here with the big trend score, first thing you notice is never had a chance to go bearish. So when you have that mentality, like this thing's way extended, it's got to come back down at some point. No, it may take a long time before it comes back down. So the first thing is align yourself with the major trend. The major trend is up, and then you see the windows of opportunity here where the big trend score is picking up, especially some just beautiful full month of massive upside like you saw in this one in the prior November phase in a prior year. And you see how the stock's just going pretty much straight up vertical there as we jump down into this chart right in here. So you see that kind of verticality. We see more of that happening February the next year. But point being that you're trying to trade that speed of movement. You don't want to be in the slow trains. You want to be in the fast trains. The great thing too is this chart shows you a nice little overview of the tools that go into the big trend score. So tools like %R kind of get a double weight because I'm looking at not just today's action, but the day it goes action. We do the same thing with the ADX and the DMI, which are a couple of the Wells Wilder indicators. And you can see in a 2-day directional movement as well. So we get extra weight on directional movement and %R, but we use other tools as well that I've seen that have worked, like Commodity Channel Index, one that I adapted from a gentleman, Perry Kaufman, I call the efficiency ratio, from a talk I saw Mr. Kaufman do long ago. My acceleration bands, John Bollinger's bands. So you got a lot of tools working for it. Of course, the broader moving averages. So you get all these things lining up one way or the other, or not lining up. And if they don't line up, you have no interest in trading if the big trend score is near zero, or there's a lot of conflicting signals. Your goal should be to get all of your rivers of time and opportunity flowing in the same direction. So if you're looking at, okay, a lot of bullish indicators all hitting at once, rather than worrying that it's the end of the move, you're saying, you know what, that's like multiple rivers flowing together. So you look at, here's Facebook. We do trade a lot of the FANG names at big trends. And you can see Facebook just starting to go into that big trends bands indicator right back here, broke out above that resistance and then closed above it right here. But if you're using the big trend score, you're going to wait a little bit and say, okay, why would I wait and leave some money on the table? Because you're looking for that extra confidence to catch this next more powerful accelerated run here in the middle to end of July on that phase. So, again, and notice here's another attempted setup coming in later that really doesn't confirm. So, when it sets up and first bar outside of those bands, I've got to see it close above it. To me, that's not enough confirmation to get me on that next move. So it's choppy that entire next month or two. I leave the chop to everybody else. I don't try to buy the lower band. You'll see examples on here where you're like, hey, I could have bought the lower band. I could have sold the upper band and made some money on that trading range. You could have. But the problem is when you start trading that way, it will change your philosophy of where you're looking for your next big trend opportunity. You will then start saying, oh, well, we're running up into the upper band here. It should be resistance. You start saying, okay, well, I'm going to buy some puts on that. And then you get blasted if you're trading bearish into that upper band. So what I do is I wait for the confirmation. Then I can trade with confidence outside of the bands. So you can see another little phase there with Facebook where everything was lining up very beautifully on this one. That was a late April to early May period. You can see we're getting all that nice, very overbought big trend score. And again, notice the speed of movement. It's going to start percolating and really heating up through this little phase right here. When you buy options, you're buying options and the market's pricing them based on some typically what's called historical volatility. But what you pay for is what's called implied volatility. And the only time the implied volatility really gets out of whack is usually right in front of earnings. So right in front of earnings, I'm very careful not to buy options days before earnings because you're going to really overpay for those options. I usually like to either get like a month ahead of the earnings and trade it in that phase, or get the earnings, like we're in earnings season, get the earnings behind me and then trade once the earnings volatility has been taken back out of that situation. So that's another good options rule of thumb to keep in mind. Alibaba's been a very good one for me over the years. You can see that it's considered like the Chinese Amazon essentially, but basically, you see how you get these phases where it's just steadily charging to the upside. Isn't it interesting too that there's nothing happening even below the zero line until the bottom right side of this chart? So that's as bullish of a set of readings as you can see when you're not getting even any dips below the zero line. Never try to pick tops in any name, much less one that's that strong. So you're going to see, there's nice phases where these things can run. And I wanted to point out, we're heading into the presidential election. We are starting to get a signal on bonds that looks a lot like what we saw in the pre-election and post-election phase in 2016, which is the bond market. You can see really went into the tank. This is the TLT, 20-plus year bond market. We'll try to take a look at this on the current chart here in a few minutes. I want to just update you on these, what we're looking at first. But you can see there was a negative signal happening, and then that was happening September, October, and of course, early November was the election. And look at how it's just the bottom is falling out of that market. And actually, it said the best part of that trend that was the most bearish was actually in this phase right after the gap down, right through this window here in the second half of November. So point being that, we're heading for what looks like the bond market saying, okay, they're going to keep spending out the wazoo no matter who wins, and that's probably going to be inflationary. That's not good for bond yields that are yielding, 30-year bond yields like 1 2/3% or something. It's absurd how low it is, especially when you factor in inflation and taxes. I don't know how anybody can expect to make money on a bond in a real sense over the next 30 years. But regardless, that's a different topic. Notice here was a bearish period for gold. We're actually bullish on GLD longer term right now, but basically, it's consolidating in the short term, so we're kind of waiting on it. But you can see that steady decline, that red phases where that can catch a nice steady move to the downside. Same way on the upside, there's GLD, or prior August, September run. That September phase was the best quick phase for gold, and we've been really successful trading not just GLD, but names like GOLD, Barrick Gold, as one of our go-to names, along with Newmont Mining. So, like even a name like GM, Jeff and I talked about this one in the past. It's been heating up again here recently. But in the past, I told him it's unbelievable to me GM setting up as like a tech stock in this phase, and you see the run that GM had when it went from like 38 to about 44 in less than a month. And you get to move like that happening where the market, I guarantee you the market is not expecting that big of a move. And it's happened again with GM here recently as they talk about going electric and making investments in electric vehicle companies and whatnot. And point being that whatever ends up happening with that, it's about taking advantage of that short-term window that's open for you. And that's what the big trends band show you, the big trend score shows you, is that you've got that sweet spot where it's really trending strongly in your favor. Now, if you're new to options, I typically would recommend starting with an in-the-money option, which is basically saying, okay, if the stock's trading at 56.6 and you're buying up and you're betting on it going down, and that's hard to get used to. The put gives you more money made if the stock goes down. You're buying a right essentially to sell the stock. In this example, at a fixed price of $60. And so the fixed price of $60 is already worth $340. That $470 pays with that extra $130 is called the time premium. So most of what we do for our Grand Slam aggressive options, $1 option strategy, is buy out of the money options. It's more aggressive because you need to get that fast move down to say $50 or so to get paid we would still be looking at November options for the next week, but then mid-December would be the next expiration after probably this next week is over once we get past Halloween. But point being that, you look at this and say, okay, you can still get about a 10-to-1 leverage on your underlying position. If you were short the stock and it went to 50, it'd make 11.7%. An in-the-money option here would make about a little over double, about 112%. That 470 would be worth 10. That's a $530 gain if it goes down to 50 on a 60 put. So right to sell at 60, you're at 50. That's worth at least 10. This has worked for me through the financial crisis and all kinds of other things in terms of downside opportunities. This was Bear Stearns with the %R. And interestingly enough, that was the first move down July of 07. But then in March of 08, everybody was saying, okay, well, Bear Stearns is getting too beat up. It's come down quickly here, and you can see it was breaking this whole oversold threshold here. And when it went oversold, was that a time to buy the stock? Of course not. The institutions were dumping, and the stock went from 70 down to about $3 in about 2 weeks. Unbelievable kind of declines. And I mentioned that efficiency concept. Which of these trends would you rather buy a call on? The more volatile, say, tech stock in red, or say the slow and steady grocery stock in black? You know, and you say the key difference is, say, the tech stock's got 40% volatility, and the black grocery stocks got 20% volatility. From point A, say once they both start at 50 and they both go to 60, you know, from point A at 50 to point B at 60, they're going to be the same. The answer is that you want to be in that slow, steady grocery stock in an option trade. Say by the at the money 50 calls on both, you're going to pay up for those tech stock calls, and you're going to get the same net movement in the grocery stock, and you're going to get twice the bang for your buck because you paid half as much in time. Efficiency is something that you can see on this green line on this chart. We also got the percent R in red below, my acceleration bands above. This was silver in a prior really bullish run. You can see that when it was going into that really efficient phase here, there's the breakout happening. Confirmation is actually the day after that green signal. And you can see it stays oversold. We get one retest back into that support level there. Actually get another couple of retests. You could get back on the wagon here while silver is kind of keeps setting up for telling you it's about to keep going to the upside. And when does it crash? They changed the margin requirements actually on, it was kind of like back to the Hunt Brothers days of like people were worried about somebody cornering the market. There's our support line, and the next day it crashes below that. That's the exit of the efficiency signal. Now, of course, that's leaving a lot off the top, and that's why I say I want to be gradually taking money out as the market makes it available to me. So I've left myself a little time to go through the actual MetaStock program, and in about 10 minutes or so, I'll hand it back over to Jeff. But I want to walk through the actual MetaStock software here and say, okay, these are not recommendations, but saying, like, you know what this year's been about? It's been about like the vaccine names, right? So when you look at this, you say, let me zoom it in a little bit so you can see it a little better here. But basically saying, okay, you know what? Look at this phase here. Like when you're seeing, there you go, this this very overbought phase. This is actually Novavax, NVAX. And you can see moving outside of those big trends bands, but also getting that very overbought phase right in here. And you can see it really launched in that overbought phase right about early July. Now notice on this one, remember I said about the 5-day rule, if you count out 5 days, 1, 2, and 3 days later, you'd be down initially after that signal. Okay, I think it's important to remember that that can happen. Everything's not a vertical line to the upside, but if you count out the 4th and 5th day, there's our 5th day, you're above where the entry signal was. So the point being that, okay, the 5th day in, you're good, and then 6th, 7th, 8th, and 9th day, you're cashing in big time. So the point being that, okay, once we retest back below that overbought 80% of our indicators set up here, that's telling me that at this low right here, it's got to hold that low. You see it's right back at the big trends bands as well, and it does launch again. It starts to get a little spottier right in here where you can see, okay, now it's got to hold that retest. It holds it. We launch one more time. Then we come back in. Do we get below that 80% level? Here, it's right at the 80% level. So it's actually got to cross under it, which actually happens here. And this is why we'd actually cashed out of this one in advance of it hitting that high, and then it cratered back down. We were already out. So that's a big part of it. Now, recently, everybody's still talking about a lot of these vaccine stocks. Are they anywhere near our overbought or oversold thresholds? No. Even though it looks like it's breaking down a little bit on the big trends bands, it's not oversold enough. So when you go in and look at whatever your preferred name is, I heard McDonald's be mentioned by the prior speaker, is saying, look, McDonald's not something I would usually consider for a super strong signal, but look at what happened right back in here. A couple times it got up near that overbought or right into that overbought threshold, but did not confirm, did not follow through. But look at when it went overbought right in here. McDonald's was trading about 205 at the high. And you're saying, okay, well, if it gets above 205 on a close, and 2 days later it did, 3 days later, actually, it closed up here at 206. That's August 12th. Look at how steady that uptrend is over the next several weeks as this thing stays in the overbought threshold on the big trend score. And this stock goes from 206 up here to about 220 in about 2 weeks. That's a huge move for McDonald's standards, right? Right now, it's slowly cranking above there, but it's too slow for me. I'm not really messing with it right here because it's not something that fits my profile. You think about it in comparison to someone mentioned Tesla. You say, look at Tesla. Now, Tesla really had some, we got to zoom out on this one a little bit so you can kind of just get a flavor. We go back in time a little bit and say, okay, look, when you see there was the phase where when it tries to go overbought and doesn't confirm, you don't want any part of it. But when it does go overbought like this one, they announced that stock split, then Tesla is starting to confirm right in here. And quickly the stock goes after a confirmation. Again, not a cheap option to buy $2,575. And in 2 days, it's up here at $32.50. So you think about that, and you said a stock that can make something like 30% in 2 days, and of course went on even higher at about 3,300 right there a few days after that. But again, you catch that speed of movement. Here's another one happening right in here, right before its stock split. There's our setup. Our setup's at 41.25, confirmed at 41.37. The next day's close, and then 2 days it's at 47.44, up about 18%. So, but again, those options are not cheap. So, and so that's why I tell people, if you like to trade typically like if we were talking about Apple as its recent phase here, Apple's recent phase gave one of the signals right before its stock split as well. Remember, it split at the end of August. There it is, getting overbought here at the end of July, and the next day it closed above that that high. There was just 13.23. You can see. And this thing ending up going here to they've adjusted for a split, but basically the point being that that's the buy signal at the start of August. You can see it rallies in the neighborhood over the next 3 weeks. It rallies about 25% to 30%. So the point being that there's a lot of opportunity here to take advantage of those kind of names when you really jump in and lock it down. And maybe if we look also at, say, the Dow, just look at a broad market average. Usually the broad market averages are not going to be as good on these big trends indicators. They're going to tell you a little bit about what's happening here. And this is actually from a prior period, I can tell. So basically you can see here, you look in here and you see like the DIA, there it is, 1023 close. There we go. Okay. So essentially, the Dow will get about overbought, but then usually will just kind of stall up at this 80 line. You can see it's pretty common that it'll do that. And it'll also, if you go back in time a little bit, it'll also show you that, okay, think about the March pandemic. That was very unusual for it to break down at 80% and then keep going down off of that low right there. When that happened with the pop down there, that was the end of February 27th. We said, hey, something unusual is happening here. This should not be breaking down like this. So notice also when it comes back up and retests, it tested back up here at the start of March, right up into this resistance here, which is around 267 to 270. It's retesting and saying, okay, yes, but we're not out of the woods yet. And when it broke that lower band, we really went Katie bar the door to the downside. And you think about a name like, say, the oil name Exxon, which is such a bellwether name. And so let's see, I'm not sure, I'm punching the wrong signal here. 1 second. So we say, okay, XOM. There it is. Okay, so you look at Exxon. That was telling you there were big problems ahead for oil and the big oil, especially as we broke that 80% threshold there. That was late January. So while the rest of the market was still recovering into mid-February, February 19th was when the stock market made its high. Exxon's already setting up for a breakdown here, just under $65, $64.70, and it closes below it there as of January 28th, and again on the 29th at $64. And so each one of these test points are retests. That first retest that happens here at the start of February was about $63 as resistance. It held that. Did it again up here in this little rally. That was as the market peaked. Exxon's already breaking down $60. And you can see one more retest coming here on that bounce into early March. That first trading day in March, you can see that was we're looking at March the 2nd. That's a high of 53.89. You say, well, gee, maybe I'll wait and short if it gets back up to the breakdown area. You don't get that chance on these. These things are free falling. And you can see that this thing, the next test happens the day off the March 23rd bottom. That test says the next resistance here is at 36.17. That one broke, and you would have to get an exit here this next day, March 25th, to get out of the bear trade at 37.29 close. So you can see you catch it basically down about 50% in the stock, and again, giving the signal well ahead of when everybody else is wringing their hands about Exxon. So obviously more recently it hasn't. This latest downtrend, which looks good on a big trends band, we haven't really participated in it because it's been testing but not really breaking that 80% threshold. So to us, that's too slow. Even though it looks in retrospect like it would have been a profitable trade, 42 to 32, I'm just saying I think we can do better, ironically. And that's what made the big trend score now makes me much more selective and not just trading any old band breakout. So it's all about, for me, the more selective you can be, the better off you're going to be in your trading, folks, because you're going to allow yourself the ability to say, okay, we mentioned gold, for example. Let's look at gold for a sec. And you say, okay, GLD first, and I want to look at GOLD. Look at this phenomenal move in gold back here in July. So it starts to go above that 80% line. We've already broken above the upper big trends band for weeks. But when you're buying aggressive options, you're looking for speed of movement. So right here, you're saying, okay, look, this thing is setting up here at about 173 bucks, and the next day it closes above that at 175. You have to get rid of that thinking you have to say, oh, I can't buy it up here at 175. It was just down here at 160. You're saying, look, the institutions we know are driving the market. They power this move from 175 to 194 over the next 2 or 3 weeks. That's a huge vertical up move that you can take advantage of. Now, you see some of them are a little more short-lived. This one you can see didn't work. So I want to point out when they work, but also when they don't work. Here's one where I might be buying right at the top right here and then betting that this retest is going to hold. But you know what? Count out 5 days. You bought right here. If I bought here 1, 2, 3, 4, 5, I got to take the loss right there and move on because it did not do what it's supposed to do. I will probably lose 50%, maybe even 60 or 70% on an out-of-the-money call option trade on that and say, okay, fine, I'm going to take a hit when I'm aggressively buying options on a $1 option. I buy it at $1, I might sell it out at 30 cents, 25 cents even, down 75%, let's say. But you know what? If you can make 100, 200, and 300% on this move here, that more than makes up for the fact that you might get whipped from time to time. And like I said, one of my favorites to trade in the gold stocks is, of course, Barrick Gold. I'll make sure I've got it in here. They've changed the symbol on me. Let me actually look at Newmont. I'm not seeing it in there. NEM, Newmont, of course, another great one here. NEM. Here we go. There it is. So you look at this and say, okay, Newmont, another name that when gold's running like that, you should expect it to do well. Now, this one did particularly well right at the start of the year. So we really scored big on these. You can see late last year, everybody knows that with the government spending basically out of control, and of course the pandemic has accelerated the government spending in the U.S. and abroad, that of course that's having an effect on the dollar. It's having an effect on the fact that it's got to be inflationary over the long haul to spend trillions upon trillions upon trillions. And gold's a likely beneficiary of that. You know, there's talk earlier on CNBC this week about Bitcoin could be a beneficiary of that even. But, you know, gold's kind of the standard way that institutions are going to want to get some inflation hedge. You can see December and January, very steady uptrend. And like we said, Barrick Gold, we scored big on it from late January to February during this next quick wave to the upside that Newmont showed there as well. So, and like I mentioned, I don't want to forget about the bond market because this is a fairly fresh thing that I'm watching here. If you look at the TLT.O here, check this out. So, and that's incredible, obviously, trade to the upside in the pandemic. That was the fear trade, the safety trade to buy bonds. And you can see that was a tremendous trade we had from mid-February to early March as bonds went from the mid-140s to the mid-170s, a 30-point handle on the TLT. But look at it right now. I'm watching this. I'm not really quite there yet on the bond market because we're just testing into that 80% level as of the Thursday low. It did not close below that low, 150, about 157, 156.97. We bounced back yesterday and finished at 158. But I'm saying, look, it looks like a pattern that we saw from 2016 where regardless of who wins, the bond market is worried about inflation. They're worried about, you know, the government money printing presses going nonstop. The money supply is out of control. It's going up at a 25% annualized clip. Paul Tudor Jones mentioned on CNBC it might usually go up 3 to 5%. So essentially, you know, you've got this expectation building in that we're going to get a ton more spending, which is why I believe the stock market hasn't tanked. You're getting, you know, some nice strength in like the small caps. If you look at the Russell, it's acting much better than the other averages. Notice where it held in this latest retracement. It didn't get into that super strong breakout yet, but notice it rallied, and then while the rest of the market came back off harder, it held right around its big trends band support. About 159 here is the big support I'm watching on the IWM. So the point being that, there's just a ton of trade opportunities out there that Big Trends Toolkit will help you pick up for. Our latest innovations, Big Trends Score with the Big Trends bands on the latest version, the third version of the Big Trends Toolkit that Jeff and his team at MetaStock so kind to spend all their time to help put this together, because I'm using this every day to find these names through the Explorer, through the scanning, and then say, okay, and then I put them through my filtering with what I've showed you here to say, don't just show me when it first pops out of there, show me when it's going to continue to go. Those are the trades you want to be on, folks. So when we get into the next vaccine name, for example, we've had so much success this year with our stock doublers program with vaccine names. So if you looked at a name, we mentioned names like Novavax and of course Moderna. I don't know if we'd looked at the Moderna chart. Trump mentioned it in his final debate. Obviously, Moderna.0 here, you look at that and say, okay, lately they haven't been doing much, right? They've been kind of cooling off here. But look at what they were doing earlier in the year. When the pandemic was hitting in March, especially for the stock market, you can see Moderna was kind of consolidating here. But look, it was just getting ready to launch into another big trends, powerful opportunity. And the best one here was the May run. So you had this run here really accelerating, and the stock went from about 55 to 60 on up to about 85 in about a week. So there's tons of opportunities that you can find with these to find the next leaders. My belief is that what you've seen in all the money flow in the last decades into the S&P index funds, the passive investing trend, I think you're seeing an unwinding of that because of COVID and the pandemic, you've seen a two-tiered market, a bifurcated market. There's the stay-at-home sectors, whether it's airlines, restaurants, hotels, travel, really badly affected. But then you see tech, you see vaccines, you see, of course, a name like NIO and China electric vehicle name. It's just been a phenomenal name for our stock doublers. And look at the beautiful trend back in May, June. Of course, surging again here recently, just now giving a retest right back at the bands. I'm in that trade still and betting that's going to hold. I could be wrong, but if that retest from the Thursday low doesn't hold, that was at 26.81, I'm out. Notice intraday it traded below there. It's holding it at 27.16's close. So it's crunch time for NIO to see if we keep holding that trade, but we're still in it for a last piece, trying to get our last piece of our stock double on a double, actually, 300% target. So that's what we do within our $1 options, go for 100, 200, 300%. And MetaStock is such a great scanning tool to point me to which names are going to be the next leaders or the next big breakdown candidates if we go through another down wave, the dark winter that candidate Biden was talking about. We'll see. Our job as traders, so I pray for everybody that's been to stay healthy, and of course anybody that's been affected by COVID. Please, get a vaccine to us as soon as possible for everybody's sake. The prayers going out all the time. But in the meantime, as traders, we have to trade what we see. We have to trade what's happening right now. And your job is to align yourself with that. That's what MetaStock shows you with these toolkits, like what you've learned about today. The Big Trends Toolkit shows me, and it'll show you how to find the best names, how to stay with them, and also how to get rid of them if they're no longer fitting that very big trend profile. Let me hand it back over to Jeff, see if we've got any questions, and I want to have him tell you more about the toolkit because he knows it better than anybody.
Right. We do have a couple comments off of the YouTube side. Scott says, I've been using the Big Trend Score for years. I'm very happy with it. Not really much of a comment, but I think Phil just said the words Virgin Galactic. Right. So, you look at some of these names here, right? So like SPCE, and you say, okay, that's the Virgin Galactic name here. I'm not sure which one we might have that would actually do it. K.
Thank you.
Yeah.
And you say, okay, this is a very volatile one, right? So it's one of those, Richard Branson behind it. It's had its booms, like looking back at the start of the year. You're right, Phil. Fantastic big trends confirmation with the trend score breakout right in here about the second week of January 2020. Stock was 13. You can see on its way to 40. And of course, look at where it ended, by the way, too. So you see that first retest, it held that first retest right off of that first low there. Remember, use the end of bar closes, 1623. It was tested below the next day, but it closed back above 1623, so you stay with it on a closing level. But once that retest breaks right there, it broke right before the gap down. So it was testing at 29, it broke it right here at 28.75. You should be out by that close, and then it gaps down right behind that. So that's where you say, okay, and not just even if you were on that gap down, you're just like, I can't be a part of this. It's the wave is going against it. So right now, where's Virgin Galactic? You see, it's kind of back and fill. It's not something I would mess with. It had that brief run here in July. But point being, yes, Jeff, that there's so many names that you can pick up with this and trade them for while the window of opportunity is open. Once it closes, you have no business being that trade. So I think the hardest thing for traders is to be consistent in what they're following and what they're doing, not jumping around between time frames, between indicators, between different methodologies. Stick with one thing, folks. Try it for a while, and don't just try it, but be consistent. Even if you weren't trading real dollars with it at first, just testing it. What I always tell people is trade it like you were trading real dollars. Mark it down on a sheet, on a spreadsheet, or I like doing stuff by hand when I'm first testing it out. It just makes a connection with your brain. Say, okay, I would have gotten into that. I would have made money there. Next one, I would have lost money. And say, okay, buying $1,000 per contract, or $1,000 worth of shares, or whatever your dollar amount is. Say, okay, I would have gotten 30 shares of that. I would have gotten 10 shares of that, whatever. And start treating it as a business, folks, because you can't just be haphazard about what you go into and go out of. That's a hobby. That's not a business. If you want to make money in trading over the long haul, you've got to be disciplined about tracking what works, tracking what doesn't. And that makes you more disciplined about not just getting in. Getting in is the easy part. Getting out is where the discipline kicks in to say, okay, whether it's working, whether it's not working, the 5-day time stop, the upside price targets, and the 5-day time stop are my just must that I must follow when I'm trading this with options, because that keeps me from getting emotional. It keeps me from getting lazy, sloppy, or worse yet, taking a small loss and turning it into a big loss. So that discipline will really serve you well, folks, at trading. A lot of people are attracted to trading, Jeff, I find, because of the freedom of it. They don't have a boss. They are their own boss. But with that freedom comes responsibility. You have to be responsible to take care of your capital, treat it well so that it will continue to grow for you, rather than being sloppy about it and letting it get frittered away. But I think that the toolkit, the latest version, is so powerful, Jeff. Thank you and your team again for all the great work you've done. It just helps me to narrow thousands of opportunities down to a handful per day that I look at, reducing my stress, reducing my work, and really allowing me to dig deeper on the few names that I want to look at, rather than just going across too many names and not being able to really get as deep in the analysis on the best of the best.
Oh, I think we've loved working with you, Bryce. And personally, I've learned tons just working with you. I have another question from Rich Harris. Rich H, I should say. Price mentioned 1 month is a good span for choosing an expiration date, but a lot of the examples are 3 to 4 month trading. Do you roll positions?
Great question, Rich. What I do is I'll do is I'll take the first wave. So like, when we look at, some of our favorite trades here from 2020, and you say, okay, well, when you're going back and looking at, again, like we said, Apple. Apple is a great example, because we haven't been trading Apple here recently. It's not this one, for some reason, showing it as stronger than I'm picking up the wrong symbol there. But basically, let me pull that up, Jeff. It should be Apple.o, I guess. But basically, when you look at these, you're saying, oh, there it is. Okay. Bottom line is that, there it is. That makes much more sense, because you see right now it's Nowheresville, but the window time that Rich, you're asking about, August was the time to trade Apple. So most of these these good big moves here are going to work in a matter of days or weeks. Usually for us in our Grand Slam approach, we know within 5 days, and almost every example I can think of, especially here in 2020, it's been a quick win, or it's been a time stop in 5 days and moving on, because the market is so volatile that you want to be in it when it's good and let it keep riding. The thing that you learn about with option trading especially is you have to learn to be more patient with what's working and you have to learn to be less patient when it's not. So meaning that you don't want to get into a lull of saying, well, it's not working now, but I'll just hold on and hope that it comes back. That hope is deadly, especially with options, because you got the time erosion happening when you're buying an option. So the 5-day time stop, if it's flat or against me after 5 days, I'm out. Would I roll to the next one? It would have to be another fresh signal. So basically, like when you see like this long move happening May, June, July in Apple, I wasn't doing as much with that because you can see there's only like one phase where it gave a brief little breakout, retest, little run here in mid-June or so. Most of those moves weren't strong enough in my reading. Even though I could have made some money out of them, I'm thinking I want the greatest speed, the greatest movement. So when you go in and look at that, like, and of course, even names like that are popping now, like say Snapchat, just popped on its earnings. When you go in and look at some of those and you say, okay, .k, thank you. That basically you see like Snapchat was setting up right before the earnings for a big breakout. So you say, okay, it was setting up here. The question is, did it confirm above that high, 28.55, and the next day it was 28.66. So that was a bullish confirmation. I didn't trade it because it was right into the earnings, and I didn't want to take that risk. I should have, obviously, in retrospect. But that's a kind of a personal risk preference thing. I don't like to pay for a lot of time premium. The only way I would consider trading that is maybe buying an in-the-money option in that case and getting rid of the time premium that you have to pay for an earnings trade. But you can see, look at how strong it's been since. Even after the gap up, it keeps going. So the next pullback in Snapchat, the next what I call retest, right now would be about $39 on the big trends band. That might be $40 at some point next week, is that I'll buy that next retest. That next dip, like you see the last time Snap did that next dip down, you see you had to wait it out for a couple of days around $23 support. It bumped around, but within a week, it was back at 26. 10% bounce off that retest. So right now I'm on the outside looking in, and I'm saying you've got to be patient. You can't chase. I'm going to wait for the retest. If I miss it, I miss it. So that comes with the philosophy of, and that comes from 30 years of options trading experience, is that I don't want to be undisciplined and just chase. I want to either get in on a fresh breakout, or I want to get in on the next retest, because I know if the retest doesn't hold, I get out sometimes the next day. So you know what? If it's not working, if it doesn't hold like it's supposed to, it's telling you it's not the winning pattern. Get rid of it. Take the small loss. Don't let it turn into a big loss. If it's the right pattern it holds, then use your appropriate profit targets at the steady levels on the way up, and keep following those retracements from there. So again, long answer, but basically I'll only look at it typically for the next fresh signal rather than just to keep rolling profits. And because when I've tried that in the past, Rich, I've often seen that you roll profits and then the profits get given away to some extent. So you can do that with like a part of your profits, but don't do it with all your profits. Don't do the pyramiding. That's how even really smart people blow themselves up in trading. I want to keep it simple. I want to keep it fresh with the fresh new signals and not get too late in a trend.
All right. I think we have time for one more. Can you look at AMD?
Sure. Oh, I'm glad you mentioned AMD, because that was another great one for us in Grand Slam this year. AMD is one that everybody thinks of Apple. They think of Facebook. They think of Microsoft, whatever. But AMD has been one of the best tech stocks over the last 2 years. And this phase right here, thank you for asking, because we cashed in on this. This thing was starting to heat up here. You can see as of that late July period. And so what we did is we actually did it 2 different ways. We actually had the first breakout and caught that first wave up here as it ran up to about 72. And then we said, look, this is bull confirmed right into earnings. We do have an earnings service. We bought an in the money call, and we said we like it right into the support the day before earnings. It was $67. Now, if it had closed, even if it had gapped down, we could have gotten knocked. Probably we'd take a 50% loss if we buy an in the money option and the earnings hits against us. But instead, it went from 67 the next day to 77, and that in the money call was sitting at a double. So now we sold it too early. It kept going. Oh, by the way, if you waited for your next retest, look at where the next retest is kicking in here, right into this area right here. Now, sometimes you'll see a retest will happen below the big trends band. I definitely do not want to see that low get taken out. That was $76.10. You can see instead it went from 76 over the next few weeks up to pushing near 94 actually at the high. So, usually again, a 10 on a tech stock like that, maybe you might need a 20% move to get to your triples and quadruple target, but the 10% move should be good for a double type of a target. So you go from 76 to about 80, 83 or so, and you're going to be pretty happy with that bounce back to the old highs off the retest. So yeah, right now wouldn't be messing with it. But you know, in the sweet spot, that's where you want to take advantage of these names, and really you can see how fast the speed of movement kicks in. When this thing stays overbought, that's, if there's one thing besides you seeing the power of the Big Trends Toolkit, folks, that I want you to take away, is that whatever trading you've had on overbought being bad, you've got to erase that if you get into the best trend phase. Because of all the 5 days or 7 days you wanted to own AMD, there's the 7 days from this phase here to 724 here to roughly early August. That couple of weeks is your best 2 weeks on that whole chart when it's staying very overbought. So if overbought has been holding you back, folks, from opportunities that you've been missing, and you're wondering, why am I not on the best of the best names? Why am I missing these next great moves? It's because that belief system that somebody else trained you about to say overbought was bad has to be changed. You have to get in there and say, okay, I'm not going to change it overnight. I'm going to have to test these. I'm going to have to get comfortable with these. I'm going to have to follow that 5-day time stop the price mentions if it's not working. But when it does work, boy, how powerful can it be? Very, very powerful. So that's why I want you to start exploring it and use the Explorer in MetaStock to find which of the symbols is giving you the next great opportunity, the upside or the downside. And with that, Jeff, I hand it over to you so you can tell them about the toolkit.
I'm going to. I'm going to spend a couple minutes on it. Price, thank you so much. That was great.
Thank you. Always a pleasure, Jeff. Thanks for having me.
Thank you for coming. We'll see you again real soon. All right, very good. I'm going to go ahead and let's see here. Get back over to my screen, shall we? I do want to kind of show you how MetaStock works with all of the scanning and kind of identifying the signals and all of that kind of stuff. It does such a great job. And I think Price said it the best, that really what we can do is really help you narrow down and find the best opportunities. And I want to kind of show you how that works in MetaStock. We're going to talk for a minute today about MetaStock, probably about an hour, about MetaStock and how it works and how it kind of helps you. I do want to make sure that you guys can see my MetaStock screen right now. So if you can see my MetaStock screen, it was acting a little funny for me. I want to make sure you can see it, that it's coming through, and you know, that we can kind of talk about.
Yeah, I can see it, Jeff.
Thank you, Greg. All right, let's go ahead and kind of talk a little bit about how the Big Trend Toolkit works, how the scoring works, how it ties into our expert advisor commentary, all that kind of good stuff. I opened up FedEx. I ran a little bit of a scan today. This is literally the first stock that I pulled up with the Big Trend Toolkit score system. Okay, and to kind of give you, Price did a pretty good job of kind of explaining what the score is, but to kind of give you an idea of what we're doing is we're combining all of the indicators that he has used over the years, all of the ones that are in his book, and we're coming up with a cohesive score of what's going on in the marketplace. And he's been talking about that, but I really wanted to kind of show you how MetaStock can kind of help you really cut through all the noise. You're not going to have Price up and you look at Virgin Galactic or AMD or whatever, but with our expert advisor, you can literally kind of get a look over your shoulder, and he's going to help you analyze and interpret the screens for you. So like I said before, this is Federal Express. I've attached the template. There's about 13 templates. This is just the one that looks at the Big Trend Toolkit score. Okay, and you'll notice a couple of things on the chart that I'm going to point out. I need to move my mic a little bit so I'm not staring at it. But you'll notice a few things. I'm going to open up what we call our commentary window here. I'm just going to click on View Expert Commentary, and we'll have a little bit of a breakdown right here that we're going to kind of talk a little bit about. Okay, you'll notice a couple of on the screen we have like the triangles right here. This triangle just means that have a setup on this particular day that we might be looking to go long in the next couple of days. Okay, right here you had a buy signal, right here you had an exit signal, here you had a setup, a buy signal, an exit signal, etc., etc., etc. Now, you also notice there's a bit of a trend ribbon down here. This trend ribbon basically is going to start to show up if you're above 80. So, and then you've got the big trend bands that are also on here. So for the system itself, as soon as I open up that commentary, what's going to happen is you're going to have basically a little bit of an a little bit of a triangle that'll show up on your last bar. And MetaStock will start to evaluate that very last bar for you. So right here, it's going to say the big trend score is a combination of price's favorite indicators. Each of these BTS indicators can find in the big trends guidebook. Traders should look for at least a score of 80 to confirm an underlying long signal and minus 80 to confirm an underlying short signal. For long positions, you can look at this, for etc. It's just kind of breaking it down for you in fairly good English. Okay, and then just to kind of give you an idea of what we're looking at for the indicators, we're looking at Williams percent R. We're looking at another variation called the 2-day Williams percent R, the commodity channel index, the efficiency ratio, the acceleration bands, the Bollinger Bands, ADX, directional movement, moving average, and the 2-day directional movement. So all of those combined together with our bullish, neutral, or bearish to give us a total score today of 50, which we really don't care about because we're not going to trade 50. We want to be looking at this, and this is the score up here. We want to be looking at it to be above the 80 or above or below minus 80. So when that happens, when we go above 80, which we did just barely right here, and we did back here as well, you will get a setup on the bar. And I'm just going to move the setup, my commentary, back to the last day that we had this setup, which was right here. Okay, and then I'm just going to kind of read out loud to you. The big trend score is a combination of, oh, well, we already read that. So right now we've got the score breakdown. You can see everything that's bullish. Everything is bullish, giving us a perfect big trend score. Okay, you'll notice down here that since we have a buy setup, more text has actually come in at the bottom here. The BTS indicator has crossed above 80, indicating a buy setup has formed on the current bar. Traders looking at this setup as a setup should look for a trigger above the current bar's high of 183.88. So what we're saying here is we have a setup. We want to break through this high as an additional confirmation that we're going to come up, and then it's going to keep going. Mike, thank you for saying this. Mike asked a question. We are seeing just your face, no charts, no info. I'm going to assume, and let me know if I'm wrong, that you are watching on a tablet or a mobile device. And what I've been told, if you're doing that, if you swipe to the left, you can see the charts. So try that. If that doesn't work, try swiping to the right. If that doesn't work, let me know. But that should be able to get you to the charts. Mike, where was I? Okay. So now we just know. Okay, we've got it set up right now. If we have a trigger, what we're going to do is we're just going to go through the high. We want an additional confirmation that it's moving in the direction that we want. In this particular case, for FedEx, that happened just right here on August 10th. And you'll notice that we say we recently crossed above the 80. We've broke above the current high. This indicates a long signal. And then one of the things that Price has done with these indicators in this expert is he gets really, really specific about what you should be looking for. So for example, he's saying, okay, if you're interested in taking advantage of this opportunity, you should look at buying the stock or buying a call option 2 months before expiration. If you're aggressive, here's some things that you can look to do. You want to look at stocks that cost $200 or options that cost $200 or less. If you're conservative, here's what you could do. And he gives you some options, but he's very, very specific about what strike price is, what you should be looking at in terms of like expirations, et cetera, et cetera. And then in addition to that, we're going to get out of this position when the BTS indicator drops below 80 or the price drops below the low of that bar. Or if we're 2 weeks out from expiration, we'll get out that Friday before. So very, very specific in terms of both what we're looking for, the indicators that break down, and exactly how we should implement that position. Okay. While we're in a trade, it's just basically going to say we're in a PTS indicator. It's currently in a long trade. We haven't calculated a stop price yet, but we will tell you if we start to get a stop price. So we'll see let's see if we actually do have one that comes in here. We don't. What ends up happening is we get an exit signal instead, and the BTS indicator is below 80, and the prices have broken the stop value. You should look to close and get out of this position. Okay, you'll notice a few days later we did have another setup opportunity that didn't trigger. It pulled back into these bands, and just recently we had a setup opportunity as well. So again, what we're looking to do, one of the things that we're looking for is all of the indicators to conflude, to jive, and then we're going to be taking a trade in the direction of those indicators. One of the things I love particularly about MetaStock is, you know, I myself am also an option trader. What I want to be able to do is very quickly go through all of the stocks and just find the ones that have a setup. And SG just asked, how do we know the BTS indicator is below 80? Can we set up to get those messages to check? So let me show you how you can know. Like, how can I build a list of the stocks that have set up today? I think is what you're asking, SG. And as it happens, we actually just have a scan that allows us to instantly go through and look at those. So I'm going to go ahead and open up the Power Console right here. And right here, this basically is just houses all of the power tools in MetaStock. So right here, I've got charting. I can look at a quote center. I can run a scan. We call it explorations. I can do a system test. We have a very, very good system tester in MetaStock. I can do forecasting. Let's go ahead and run a scan real quick. And what I'm going to do is right here, I've got a couple of different, actually, I've got a number of scans that are Big Trend Toolkit. So this BTT3, this stands for Big Trend Toolkit number 3. Again, it's the third version of our very, very popular Big Trend Toolkit. And the one I'm going to run right now is the Big Trend Band Setup. Okay, and what I'm going to do, just to kind of keep things quick, I could run this against every optional stock. It would go very, very quickly for me. But I wanted to go very quickly, and I'm just going to do the S&P 500 to give you an idea of how this works. So what we're looking for here with this particular scan is we're looking for stocks that have triggered a setup on the current day. You'll notice right here it says daily. So I wanted to go ahead and go through the S&P 500 and just give me a list of everything that actually have a setup today, so that I can kind of put those on a watch list to see if they break through either the high or the low tomorrow. Okay, if you prefer, you could run for just a trigger. This Big Trend Band trigger will basically look for the setup to be above 80 yesterday and have triggered on the current bar. Okay, so instead of looking at, in this case, if we look at the chart, instead of looking for the diamond, you'd be looking for the buy signal or the sell signal. So let me go ahead and run the scan. We've got the BTT3 Big Trend Band Setup scan. That's the one we're going to run. We're going to run the local data S&P 500. I'm going to go ahead and start the scan, and we'll just let it run. I do need to, we'll just have it do the S&P 500. And where is it? It looks like it came over here. Let me drag it onto the screen that you can see. And you'll see it's kind of actually moving quite quickly. This is data that I've actually downloaded. So you can download data. You can also scan local data online. And before I kind of talk to you about the discrepancies of the differences, it's already done. So particularly, you'll also notice that it's a little bit faster. Probably, I notice it's faster when I'm not showing people the scan while it's running, just because there's a lot of bandwidth that goes into kind of broadcasting your video and your face and your audio and all of that kind of stuff. So right here, out of the S&P 500, if I just want to focus on the ones that have that setup opportunity today, you'll notice that out of the S&P 500, we rejected about 470 of the instruments, and we have about 35 that are left. Okay. You'll notice down here in the columns, we've got a buy column, we've got a sell column, and we've got a big trend score column. Okay, so if I wanted to scan these based on which one I've had a buy setup today, right here you'll have Amerisource, you've got Amtech, you've got Chipotle, you've got CVS, Dollar Tree, DuPont. All of these all are issuing a setup on the current day. So then I can also look at kind of what the score looks like over here. It's going to give us all of those kind of values. And so that's really kind of how it works. The idea here is it's going to give you the ability to kind of step over all those mediocre opportunities, like Bryce likes to say, and just focus on the ones that work. I hope that makes sense for you. I am very, very proud of the Big Trend Toolkit system. The initial version I actually wrote myself. It was the very first really big coding project that we did with MetaStock. Won't get into like the whole story of kind of how that happened, but it's one of the things that I would I really had and still have a great respect for Price and the methodologies that he uses and the work that he's done. I mean, he's still a Timers Digest top market trader on a very consistent basis. And I love the work that he's done. And I love the fact that you're looking to ignore little things and really focus on the stuff that's going to help you make money. We released Big Trend Toolkit probably 15 years ago. It went on to be one of our most popular add-ons that we've ever released. In addition to that, we've went in and made a second version and the third version. So it's been something that we've been working on as well. It stood the test of time, if you would, and I just couldn't be happier with it. The fact that we've been working on it for over a decade now means that we've actually put a lot of methodologies in it. So you've got the 80-day Bollinger Bands, you've got acceleration bands, of course you've got the score breakdowns, you've got the EMI difference, you've got efficiency, you've got force index. These percentage above the 200 and 400-day moving averages look for stocks that have kind of gone into outer space, as Price likes to talk. It's a very complete system of all of the work that Price has done over the years and the contributions that he's made to technical analysis. And it's something that I personally am very, very proud of. So in total, there's 17 explorations, 17 expert advisors. They do have system testing, so you can have the ability to go in and test trading ideas. You've got templates that kind of just set up the charts exactly the way that you want. And then all of the custom indicators that he's written in his Big Trends books and in the work that he's done over the years. So SG, you're welcome. Thank you for the question. This toolkit we sell as a one-time cost. It's normally just $699. So you buy it, you make a couple good trades with it, and the idea is that it pays for itself. We're going to do a special here at the summit today where we're going to give that to you for $599. And we're not only going to do that, we're going to back it up with a 30-day money-back guarantee. So for $599, you can buy this as a one-time cost. Just plug it into your MetaStock. The same goes as what we were talking about an hour ago as well. If you don't have MetaStock, I'm going to talk a little bit more about MetaStock as we kind of get into the last session today, which will be next. About 25 minutes late too, but that's okay. But I lost my train of thought. But MetaStock has been rated the #1 software program for 25 years in a row. It has so many great tools in it, like scanning, testing, and the expert advisor and the commentary. If you don't have MetaStock and you get the Big Trend Toolkit, not only will we give you a 30-day money-back guarantee on the Big Trend Toolkit, we'll also include a copy of MetaStock for you to evaluate for the first 30 days. And we'll give you the real-time version of our MetaStock program as part of that. So you can give us a call. The phone number is 800-882-3040. You can visit us online at metastock.com/saleschat, and they can help you with that. It is also part of our MetaStock Summit Traders Action Pack today, where you can actually get a 3-month subscription to MetaStock, 3 months of Zenith data, the RMO ATM, which is the add-on we talked about earlier, the training package that we put together with Rahul, 3 months of learnmetastock.com, the website, our home study course that talks about MetaStock. We're actually throwing in 2 years of stocks and commodities, and we'll have what we call our White Glove installation service, which is really just somebody that gives you a call, make sure you have everything installed, helps you with anything that you might be stuck on, and kind of walks around the program for up to a couple of hours, depending on kind of how much help you need and that kind of stuff. It's something that we do for free. It's a scheduled appointment, so that you make an appointment with one of our White Glove service reps, and they will give you a call at a set time and help you get everything installed. So you can give us a call, 800-882-3040. We do have Bobby ready to answer any questions you've got. You can chat online with him at metastock.com/saleschat. So I know a bunch of you have used MetaStock already for a number of years. I'm going to talk about it for, at least 30 minutes. And but it's certainly something that I wouldn't trade without. And these are some of the best add-ons that we've created. So 800-882-3040 or metastock.com/saleschat. Okay. So let's talk a little bit about our sponsor, Stocks and Commodities Magazine. Thanks for the sponsorship. Want to thank them for helping us with the stocks or with the support of the event for the last 7-8 years now that we've been doing these, and they just do a great job. And as part of the summit package that we're doing, they are gonna provide you a 2-year subscription. So if you get the Traders Action Pack, or if you just spend over $300, they'll give you 2 years of Stocks and Commodities magazine. So give us a call, 800-882-3040. Okay. All right, my turn. This is looking a little funky, but you know what I look like. I'm right here. This is my high school picture. Just kidding.
Hey, Jeff.
All right.
Jeff.
Oh!
Jeff. Did I startle you?
What? What's up, Craig?
Hey, so no one should ever have to introduce themselves, so I'd like to take a moment to introduce Jeff. Well, first, Jeff, you should tell us why we should be attending our first multi-day online extravaganza event coming up in 2 weeks.
Oh, you mean where you can get 21 hours of free market education?
Yeah, and 21 different speakers sharing their professional advice. Not to mention the door prizes that have just been approved.
Well, I'll let you talk about that. I'm gonna settle down from you scaring me out of my chair.
So let's see. The last time we checked, the average tenure here at MetaStock was about 11 or 12 years. Jeff and I have both exceeded that by quite a bit, and the reason it's so high is it's just such a great company to work for, and if I can say so, it's a fantastic product. And I believe Jeff has been here for about 23 years. Oh, Jeff just went off camera. There he is.
24. I was gonna.
Yeah, 23. All right, 24 years. He started in sales. He has a great track record in sales, and he's now our sales director and also the director of business development. And Jeff, you keep on going off camera. At any rate, he's just a great guy. Jeff and I have had the opportunity to travel around the world to several different fabulous locations, and I spent a lot of time with Jeff over the years, and I can tell you from personal experience that he's just a great guy. And he's a really good presenter, and if you haven't heard Jeff present before, I know you're going to enjoy the next 30 to, I don't know how long he's going to go, but the next presentation. So Jeff, with no further ado, there you are.
All right. Thank you, Greg. I'm going to take these off now. I don't really need them. It's going to help me not get scared out of my chair. I just jumped about 10 feet from that rock. In any case, yeah. Greg also, I would vouch for him as being a nice guy too. But let's talk a little bit. I do want to talk a little bit about the history of mine with MetaStock, because I really enjoy working here. I remember it's been about 24 years in March, if we're going to be really specific. About a decade of that was working in inside sales. And so if you had questions about the product or kind of like what it could do for you or that kind of stuff, I would work directly hand in hand with you to kind of understand where you could improve in your trading, like how MetaStock could help you, whether that was like finding the right strategy or testing trading ideas or getting just better feedback or better education around the market. The nice thing about MetaStock is it's very, very powerful, and there's a lot of things that it can do to kind of help you identify those right trading strategies, the right stocks, and when they fire and stuff like that. So I did that for about a decade. That was a lot of fun. The next decade I spent in our business development team, and that's where I met Price Headley. That's where I met Rahul Mohinder. That's where I met Steve Bigelow, and so many of those other people that I feel are like some of the best traders out there. And I've learned a lot doing that. Like I said just a minute ago, I helped Price put all of his stuff into MetaStock. And then like for the last 4 years, I still do a lot of that, but I'm also in charge of our sales team, and my official title right now is the director of sales. So that kind of gives you a bit of a history about me. I love working for MetaStock. There's a few, the people are good. I've always been proud of the product that we represent and the fact that it's always been the highest rated software, and just how serious we are in our Salt Lake City office about creating really good software, but also how serious we are about supporting customers. We have one of the most insanely good technical support teams available. We keep more people in our support team than we keep in inside sales and in marketing. We have more programmers and support guys, but not by much. And one of the things that we kind of look at all the time is the metrics that we get from people that talk to our support team. And there's a lot of time where for the whole week it's 100% in all the areas that we measure. It's just a very good company that does software, and if you have some questions or if you need help, we're always there to help you. And I think we do a really, really good job. And so there's some information about MetaStock on the screen, to just kind of hit the highlights here. We were owned, when I started, we were owned by Reuters. They later became Thomson Reuters. And then after that, they became Refinitiv. And we actually bought ourselves back from Thomson Reuters while they were Thomson Reuters about seven years ago. It was 2013. What we have done since then is actually been able to really refocus on MetaStock and core technologies. And there's been a lot of changes to MetaStock since we bought ourselves back. But we did it in such a way that we kept a really good relationship with Reuters. They're now Refinitiv. And it's been very advantageous to us because we do have a lot of customers that are here in the US, and we appreciate that. But we also have a lot of customers that are in London or Australia or India, and those are huge markets for us. And by being a partner with Thomson Reuters, it's a $1 billion company with some of the best news and information out there. We've been able to support 95% or something like that of the entire global market cap. So it was a good relationship when we were owned by Reuters. It's only gotten better since we bought ourselves back out. And it's just been a really, really fun place to work. And I've learned a lot. So in any case, the one thing that I am proud about, and it's missing here, but is the fact that for 25 plus years in a row, the readers of Stocks and Commodities every year vote MetaStock as the #1 software program. So there you go. I do have both the chat windows open here. If you have questions, I'm going to try and keep an eye on the questions. Please make sure that you ask them. Today, what I'm going to talk about is some of the things that I like in MetaStock. They're kind of the hidden gems in MetaStock. And what I'm going to probably do is normally I come in and I talk about 3 different things. 3 of my favorite things in MetaStock, the things that I look at very, very frequently. One of those is the RMO methodology that's built into MetaStock. The second is a methodology called Haguro. And then a third one is called the dynamic trading tools. So since we're 40 minutes in to my hour, and since Rahul already talked quite a bit about the RMO, I think what I'm going to do is kind of skip that part, and we can come back to it if you guys have questions about it. But I'm going to start with the Haguro. But I want to be real careful when I start to talk about that, because RMO is my favorite built-in system to MetaStock. Like I said when I was introducing Rahul a few hours ago, it's the very first one that I started trading with. I've shown it hundreds of times, and it's one of the best systems that's included absolutely free in MetaStock. But just with the interest in time and kind of covering some different topics, some things that you might not be aware of, I want to jump into a little bit of jump past that part, because we've talked about it already today. Rahul does a better job about talking about it than I do anyway. And we'll talk about a different project called Haguro Method. And I'll show you some of my favorite ways to find breakout stocks. So I hope that's okay with you. And I'm just going to kind of go in and skip over this RMO part for now. And we're going to jump to the Haguro part. So, well, there's a little bit of a story to Haguro that I kind of like to tell when I'm talking about this. I was down in Australia before the pandemic, when everybody was still traveling. And this was actually a number of years ago. I'd say it's definitely in California at the time. So it's going to be like 9 or 10 years ago. I was down in Australia. We had gone down there for a MetaStock Expo. And I ran into a guy that ran the Australian Technical Analysis Association. He's a gentleman by the name of Gary Burton. I went up. He had a booth at the same expo that we were presenting at. There was a little bit of downtown, so I went up and I said, "Hey, I'm Jeff Gibby. Here's MetaStock. Have you heard of us? Here's kind of like what we do." And we kind of started up a conversation about what he did. And he ran an association at the time called the Association of Technical Analysis. And in a nutshell, what he did was he had this huge training course of things that he would go in and teach people about the markets. And I was like, oh, that's very, very interesting. What are you teaching people how to do? And he kind of started to talk about kind of some of the aspects of his course. But one of them that I was fairly interested in was this method that was called the Haguro method. And so I said, oh, you should definitely, I gave him a business card. I took his business card. I said, you should definitely send me some information. I'd like to kind of look at this method. It sounds pretty interesting. So he sent me all of these slides about this Haguro method, and I liked it so much that I built it for MetaStock and I put it in there, and it's included for free. So I will say that Gary Burton did not create the Haguro method. He did talk about it quite a bit. The guy that actually created it was a guy that wrote a book called The Japanese Chart of Charts, I believe is what it's called. The name of the guy was Siki Shimizu. And I know that I probably am going to get a little bit of grief for saying that wrong, because Greg, who's running all the equipment today, actually knows how to speak Japanese, and he always loves to correct my Japanese. But he wrote a book called The Japanese. Oh, stop it! Anyway, just stop. Anyway, so he wrote the book of Japanese Chart of Charts. It talked about the Haguro method. and and I coded it into MetaStock. It's a method that's been very, very well received. We do a lot of reviews with Stocks and Commodities magazine. Back during that time, Dennis Peterson did a lot of reviews with us, and so I called him up one day and I was like, hey, I'm just building this. It's built to be included. I'm going to give it to MetaStock users for free. I wanted you to take a look at it. So we kind of went through the Haguro method and everything that was kind of involved with the Haguro method. And he liked it so much that he did 2 articles in Stocks and Commodities on it. One that kind of talked about the Haguro method and how it works. And then another one that just talks about how the MetaStock add-on was free and how well it was programmed. And very, very, very flattering review of it. So it is something that we've included with MetaStock since I think we started including it in 16, if I'm not mistaken. But it's something that we actually had as a free download earlier than that for a couple of years. It just got so popular that we said, okay, well, let's just include it in the program. So the thing to kind of point out about the Haguro method before we look at a chart is it's designed for a weekly chart. It's designed to provide support and resistance on a weekly basis. It gives key turning lines, and it gives a fairly accurate forecast of weekly movement. So I'm going to go ahead and open up a weekly chart. I'm going to kind of show you, and I'm just going to kind of walk you through the elements of what's involved. I guess FedEx should work. Let's go ahead and I'm going to go ahead and apply the Haguro methodology. So, Greg, you can talk. I'm ready if you had something to say there. No? Okay.
What's so funny is when I startled you a moment ago, most of our viewers couldn't hear it. Only you could hear it. So to them, you just jumped up in the air for no good reason. Because I had one of the mics turned off. So maybe we should explain that you just don't have a Tourette's light, hopping problem. I startled you a moment ago.
Okay. Their explanation accepted. Hopefully they can hear you now. Otherwise, it's not going to make a lot of sense.
Everyone can hear me now. I'll go away now.
Why don't you tell us while you're online, Greg?
Yes.
Tell us the proper way to say Haguro.
Haguro.
And then lastly, Siki Shimizu.
I'm not sure how you're spelling the first name, but Shinzu, you're saying pretty good.
S-I-K-U, I think, if I remember right.
It would probably be S-H-I-K-U. That would be Shiku. There's no C sound in Japanese like that. So it'd be Shiku Shinzu.
Okay. Very good.
Yep. Anytime. I'm here for you.
All right,
I'll just mute myself now.
All right. Let me go back into the PowerPoint real quick here. Again, it's designed for weeklies. There's a couple things that we're going to kind of talk about. There's a Siki calls key turning lines and that kind of stuff. But the big thing that he looks at when he's looking at the Haguro method, one of the first things that we want to kind of talk about is what we call the midpoint. Okay, his midpoint line. Okay, so you're familiar with the midpoint. You take the high, you take the low, you add those together and divide them by 2, and that gives you an exact midpoint. Okay, and we use that midpoint to kind of identify different candles. We also use a midpoint that we kind of calculate based on that high-low range that we basically use as a measure of support and resistance. And so that is this big black line here. If we're trading up above this big black line, you treat that as support. If you're trading down below it, you would treat it as resistance. Okay, and you do look for crosses on that. But you'll notice that this big thick line doesn't move on every bar. What we want to do is we were looking for kind of a big range candle to kind of move that. And so it doesn't move on every bar. What we actually use as a way to move that is we use we set that midpoint. If the range, high minus low, is greater this week than it was the previous week and the week before. So if we're looking at this bar right here, we look at the high to the low, right? You'll notice it moved here. That's because the difference between the high and the low is bigger than it was this bar and this bar. And so that's the only time when we move that support and resistance level. Okay, so that's the first thing that we're doing. And you just read it like support or you read it like resistance. So this is kind of, if we're trading up above it, this is where you'd be looking for the support level. If we're trading down below it, which I can go back to a bearish period, then you're going to treat it as resistance. Okay, so that's the first part. That's just simply the way he looks at it. Nilesh says, is this Heikin-Ashi candlesticks midpoint line? No, it's different than that. We're looking, actually, I'm not familiar with what the Heikin-Ashi midpoint line is. So to be specific, because it might be the same thing, to be specific, what we're looking at, this midpoint right here, is the difference between the high and the low divided by 2, okay? The only reason we'll ever set a new midpoint is if our range, the difference between the high and low, is bigger than the week before and the week before. So if we have a big range, then we're going to look to remove that or move that midpoint. So I'm not sure, Nilesh, because I'm not familiar with Heikin-Ashi. If it's the same way that they do Heikin-Ashi, my guess is no, but that's exactly how we're looking at it. We're looking for these big range bars to set a new midpoint. Thank you for the question. Okay. All right, I'm going to go back into the PowerPoint just to kind of keep me a little bit focused. Again, it acts like support and resistance. That's what we're going to do. Scott says, another great summit. Well, I'm glad you're enjoying yourself, Scott. I'm glad you enjoyed it as well. I think Rahul and Price did an excellent job. According to Siku, basically, he's going to classify each line. So you'll notice like 1, 2, 3, 4, 5, 6, 7, 8. This basically covers just about every chart pattern that's bullish and every chart pattern that's bearish. So you've got 1 through 8 on the bullish side and 9 through 16 on the bearish side. The only candle that kind of might happen is like a perfect doji where nothing happens across that midpoint line, where it's just everything is on the midpoint line. But with that exception, we're classifying each line to where the open high-low close is in conjunction with the midpoint line. Okay, so right here you'll see that the body is below the midpoint. That's a number 1 candle. Here you have a open below the midpoint and a close above the midpoint. That's a number 2 candle, 3. And all of these candles have different definitions. The most important ones that we're looking for are 3 and 15. So when we go back into MetaStock and we look at the chart, you'll notice that 3 and 15 are highlighted blue. That's because they are basically reversal patterns according to the Haguro method. Okay, let's go ahead and kind of show you how this works inside of MetaStock. So what I'm going to do is I'm going to go back into the MetaStock, and you'll notice that we've got a little 3 pattern right here before this big move up, another 3 right before this move up, and then you'll notice that right now our current candle for 16 is candle 16. Okay, right here you've got a 3 followed by a 15, and all of those different patterns that we just looked at are actually labeled on the chart. And depending on what the pattern looks like, it's going to give it a definition for you about what you can expect. So, in other words, with Federal Express this week, when this is a long line at a midpoint, which it's not a long just means big. When this is a long line, the midpoint is set for future resistance for any declining prices. Okay, it actually was long enough for us to move the midpoint. This line appears on a regular basis as an indication of a high point in prices or a low point. Long positions can be opened. The following week's price trades below the midpoint and rises above the midpoint. So what it's saying right there is if we start up down below this midpoint and move above it, that's a bullish signal. Okay, and then a position should be open short if the following week fails to move above the midpoint and closes below at the low price. So what he's saying there is, okay, if we start down here, cross up above our midpoint line, we can consider that a long position. Okay, if it doesn't fail to move up above that midpoint line, we can look to take short positions. So that's kind of how it gives us an idea of what to expect. We'd go into next week on FedEx with a support area, resistance area of 283. Okay, all of the lines are defined. So if I highlight any of the symbols, it's going to say this is candle 2, this is concerning line 2, this happens, this is what it means, this is what we should look for. Okay, here's a candle 3. Again, it's highlighted blue because I wanted to identify this. This is a strong warning candle of reversal when found in a high price area, and candle 15 is another important thing. Now, one of the things that I want to point out is C-key. Here's how it's spelled, Greg. Don't worry about chiming in, but here's how it's spelled. C-key, one of the things that Shiki, one of the things that Seiki. Okay. All right, I'm going to worry about that for the rest. Seiki. And thank you for phonetically spelling it in the YouTube chat as well. Okay. So the other thing that he looks at is the range. So the range of this stock is not extended more than 7%. This means the candle lines are less significant. Whereas if we're kind of extended in range, you'll notice that it says the range of this stock are more than 7%. This means the candle lines are more significant. So I want to point out right here, we've got a percent in range indicator that we created to kind of measure where we're at in range. And you'll notice that the further we get away from either a peak or a trough, the higher this will rise. So if we're more than 7% past that latest trough or 7% from that latest peak, this is just a measurement that tells us how much we should be looking at this and how much, how important it is. How significant it is. I was looking for the exact right word. It's right here in the commentary, how significant it is. So that's kind of in a nutshell how it works. We've classified each of the lines. We're looking for the more significant lines. And then in addition to that, we're trying to determine how significant they are. We have built scanning around this. So the classic patterns that you're going to look for is your candle 3, which is a reversal pattern, your candle 15, which is a reversal pattern, and the Haguro midpoint cross. And all of those are scans that you can run in MetaStock. Does a really, really good job of identifying those for you. So Seiki did a really, really good job. Seiki, I think I did a better job of saying that, kind of creating this. Gary Burton brought it to my attention. It's something I like to look at on a regular basis, particularly with the major Dow indices and the S&P and that kind of stuff. I really, really like the Haguro method. So that's one of my hidden gems in MetaStock. I'm going to show you another one real quick. If you have questions, feel free to ask. But one of the other things that I like to do in MetaStock is around our dynamic trading tools add-on, which is a free add-on that's built inside of MetaStock that's designed to look for breaks through support and resistance. So let me go ahead and apply that template real quick. Let me go ahead and click on Apply Template right here. And what did I call it? Dynamic Trading Tools is what you look to apply. And you go ahead and apply this. And we'll just look at FedEx. I want you to kind of be aware of this is something that's in MetaStock. And we'll just kind of talk a little bit about what it's doing. First of all, what I'm going to do is there is a line here that you probably can't see online. So I'm going to make it a little bit thicker just so you can see it. And there's also a couple red ones that I kind of want to just make a little bit more dominant for you so you can see those as well. Okay. And then we'll just talk about what they're doing, what they're designed to do. Okay. So this automatically looks for long-term support, long-term resistance, short-term support, short-term resistance, and any up or down trend lines that it sees. So right here in FedEx, has this pretty good trend line that's been established. This was just drawn on the chart for you automatically. I'm going to go ahead and close out the commentary right now because we don't need it right now. But you can kind of see where this has kind of been designed and drawn out for you. Okay. Right here, you have a resistance area. This resistance area has been on the FedEx chart for quite some time. And right now it's sitting at, where is it? Give me a value, 169.88. So that right here is where we crossed up through that support area. It's had a really, really nice run on FedEx ever since. Okay. Down here, have a trend line that points down. This is your down trend line. You'll notice that you had a cross right here where it broke that and kind of set up for this move up. And then right here, we've got support. There's actually quite a number of lines. It's not usual to see this many lines on a chart when you apply it. Here, this was a short-term trend line that broke, and then right after that was a long-term trend line that broke. You notice how that broke through this longer-term trend line, bounced off it, treated it as support, bounced off it again before it set up this really nice run up. So these runs are just automatically drawn on the charts for you. Wherever it kind of sees them being played on the chart is where you see it. Here you had a little bit of a break down below this support area. The red lines are support and kind of moved down into this downward movement. So it does a really, really good job of identifying these and drawing them on the chart for you. And there's a number of lines. What's surprising to me is this is almost a textbook example of kind of how trend lines work, how breaks of support and resistance actually work, and that kind of stuff. So this is actually a really, really good example. I don't think I could have found a better one. But in this particular case, we do have a break of support and resistance. This does a good job of annotating it on the chart for you. One of the things that I absolutely like is obviously I want to be able to find these breaks a little bit closer to where they happen. So with FedEx, we've been kind of up above this area for a while. With the ability to scan for this, I can actually look for stocks that are breaking up through resistance or down through support very, very easily. So what I'm going to do here is I'm going to open up the Power Console again, and I'm going to bring it onto the screen that you can see. And what I'm going to do is basically look for a scan that's called the DT scans. So DT just means dynamic trend. Okay, and if I want to find a stock that's broken out or broken down, I can just find it here. I'm just going to look for the stocks that have a longer term breakout. Okay, I'm going to look at the S&P 500. I'm going to go ahead and start the scan, let it run, and I'll just show you kind of what the results will look like. So again, we're running through 500 stocks. We're going to do this DT support and resistance longer term scan, and we're going to see if anything's pretty close to support or resistance right now. So if you have questions, now's a good time. I've got about 6 seconds before this finishes. No? Okay. No, if you do have questions, feel free right here. But that quickly, we were able to go down and see what's broken up, what's broken down. And again, I just love how technology has made things so much easier. We could have opened up all 500 charts and looked at them, but we don't have to because computers do it for us, right? All right, here we've got the close price. So A.O. Smith closed at $55. Here's a breakup number. This is the number of bars ago this broke up above support, or in the case of the breakdown column, how many bars ago it broke down below resistance. Okay, this is how much up volume there is and how much down volume is. So you can see volume as percentage of that as part of the scan as well. And I'm just going to scan them based on the number of bars that they broke down or up. And we'll look for a recent breakup. So we're looking for stuff that's broken up above resistance. If we come down here, we want to find stuff that's relatively close. So if we wanted to find stuff that broke on Friday, Love, Southwest Airlines, Southern Ordinary, CSX, Cooper, Bank of America, Anthem, all 6 of those just broke out yesterday. I typically like to have them kind of establish themselves for a few days after that breakout. So we Pinnacle broke 2 days ago, Insight 3 days ago, Keysight 4 days ago, 5 days ago. And we can easily, using MetaStock, we can easily take these 5 or 6 stocks, or maybe the whole list of them, and decide on the ones that we like. But we've been able to narrow down that 500 to find bullish moves that have happened within the last 6 days that we might want to trade. So just a great tool for MetaStock. One of what I would consider the hidden gems of MetaStock. So again, if you guys have questions, let's go. Let me hear them. I'm going to go ahead and open up one of these stocks, and I'll show you kind of the associated expert advisor that goes with it. And just there is an expert that goes with it. Let's go ahead and look at, I actually have a position in love right now. Let's take a look at it. And I'll show you how that works. So you go ahead and apply the corresponding template. And we're going to go to, again, that dynamic trading tools. Okay, we'll go ahead and apply that to a chart. Okay, so right here, this is the level right here that we just broke up above yesterday. So not yesterday, Thursday, we broke up above it. Here you can see it's supported really, really nicely by this trend line. And if we go in, there's an expert advisor that we can attach. It's also called DT, and it'll just give us a little bit of information about what's going on with the chart. So I'm going to attach that. We'll go ahead and click on close. And if I come into the expert commentary here, it should again say, okay, Southwest Airlines broke above its resistance level of 40.91 1 day ago. This is a bullish sign. The previous resistance level of 40.91 may now provide downside support. Volume on the day of the breakout was neither extremely heavy nor extremely light, providing no convincing evidence. Again, it's helping you analyze this, helping you kind of pay attention to the breakout, as well as where the breakout happened, as well as, you know, if the volume supported it. In this case, the volume did not support it. So there you go. I don't see a lot of questions. Interestingly enough, we're gonna end pretty close to on time today. So, and in any case, you know, there's a lot of stuff I can talk about with MetaStock. There's a lot of different classes that we do. MetaStock does just such a good job of helping you identify the thing. Just to kind of highlight the features of MetaStock, scanning. We talked a lot about scanning, but to be honest, it's one of my favorite functions, right? There's so much opportunity that exists in the marketplace. The ability to kind of get rid of all the junk and focus on what works. It's worth its weight in gold. The expert advisor, the commentary. We did look a lot at the expert advisor and the commentary, and that helps. And I really do like the fact that it can teach you just about anything that you want. Like, so if you want to learn about candlesticks or MACD or stochastics, there's experts that'll actually kind of explain that stuff to you. The system tester, the tester allows you to go in and figure out what works well. We have one of, I might be a little bit biased. I have a little bit of a frog in my throat today too. But I think that the system tester that we have in MetaStock is one of the best ones that's available in the marketplace. It allows me to take some of these technical methods and say what works well, what stocks does it work well on, and how well does it work on the S&P 500. And it allows you to take as many ideas as you want. There's about 40 or something that are built in, and test them against any markets that you want. And you have the ability to create your own as well. Everything in MetaStock is customizable. In addition to that, there's the forecaster that allows you to use our patented method to see what's likely to happen in the future. And so, you know, those tools that are very, very helpful that have helped us provide so many customers with good trading advice, but also have those customers vote for MetaStock year after year after year after year. You know, I've been here 24 years in March. We've been rated #1 all that whole time. It's not my fault, right? But like, I'm just so proud of that. You know, we see so many software companies that come and go over the years, and to have something that's just such a solid brand that's always improving, and you know, it's fairly inexpensive as well. I've seen software that's $3,000 or $4,000 that was really insanely popular, no longer in business. You know, so in any case, how much does it cost? So we do have two versions. We have MetaStock Real Time. We've got MetaStock DC. Our Real Time version comes with a program that we call Zenith, which is a real-time news product that was created by Thomson Reuters. They're now called Refinitiv. They spent about $1 billion on it. They support that product with some of the best news on the planet, 200 different news bureaus, 2,500 reporters, really the same information that your broker or your hedge fund or your institution is probably paying a lot more for. So you can get that real-time news service as well as the MetaStock platform. It's only $250 per month. And that basically gives you MetaStock and that award-winning Zenith platform. Okay. We also have an end-of-day version that everything we've kind of talked about today with technical analysis can be done in MetaStock DC. It's only $69 per month, which includes MetaStock. It includes all of the data that you need. If you're here in the US, I would include all the US data with the North, South American, Canadian exchanges, anything that you want. It includes futures, it includes Forex, it includes commodities, basically everything that you want. And if you happen to be overseas, like you're more interested in India or London or something like that, that data will also be included. We include a whole region. So if you're in Europe, you get a European package, which includes London. Or if you're in Asia, you can get an Asian package. So, and all of that would include software and data and futures and stocks, and whatever you want to follow. So it is a fairly all-inclusive price. Okay. It is, of course, included as part of our Traders Action Pack. With the Traders Action Pack, you can get 2 of our best, most award-winningest packages ever. Big Trend Toolkit, the RMO ATM. You'll get 3 months of MetaStock real-time, 3 months of that real-time data that I was talking about. You'll get the Rahul Mohindar training package. You'll get access to 3 months of learnmetastock.com, Unleash the Power of MetaStock, 2 years of Stocks and Commodities magazine, and our Wycliffe installation service. Normally that would be about $2,700. It's only $1,196 here at the event today. So give us a call at 800-882-3040. You can chat live with us at metastock.com/saleschat. If you need anything from me, feel free to email me, jeffrey.gibby@metastock.com. Or give me my email address. And I hope that was helpful for you. Let's see what questions have come in. I know that as I kind of try and wrap up, sometimes I kind of ignore questions a little bit. I've seen a couple come in. John Person says, new here and trying to stay up with it. What is the last exploration template? Okay, so good question. Thank you for coming. Welcome, John. This is what we're looking at right here is what is called the DT. If you're in the templates, I'm going to apply template called Dynamic Trading Tools. Okay, one of my favorite templates. Basically puts all of these in here. The explorations that we were working with here started with DT as well. So let me try and find my Power Console real quick. It's like under my picture on the screen. I think I got it. No, there's so many windows open here. Okay, power. Okay, I got it. So right here in the scanner, there's 4 different scans. They all start with DT for dynamic trend. There's support and resistance long term. Okay, dynamic support and resistance short term. DT trendline breakouts long and short term. So basically, there you go. That's exactly what they're looking for. The longer lines are just the ones that take longer time to establish. Those are the ones that I prefer to use. I'm not a super hyperactive trader. I like to kind of get into a position and feel comfortable in it. So that's the reason I run the longer term ones, because it does allow you to kind of find some of those positions that have been kind of knocking up against a resistance level for a while and have broken up. So let's see. John, thank you for that question. I appreciate it. If you guys have any other questions, jeffrey.gibby@metastock.com. I would encourage you, if you haven't tried MetaStock before, even if you just sign up for the extended trial where you buy a month and get 2 months for free, for the pricing that we give you starts at $69 per month. And with our extended trial, you can actually get 3 months. So November, December, January 24th. For $69, you can try MetaStock to January 24th. Understand for yourself why it's been rated #1 was the best software program in its price category by the people that read Stocks and Commodities magazine. So with that being said, I want to say thanks for coming today. Hopefully we can help you. 800-882-3040. Chat live with us at metastock.com/sales-chat. And also, Greg, why don't you put up a link for the conference again, metastock.com/conference. Come to our free class that we're doing in 2 weeks. It's going to be a 3-day class, totally free, 21 hours, free education. I'll see you there.